Hi everyone, welcome to a brand new episode of the BarberShop. Today I have with me Nishant and Sunish, founders of one of India's most successful homegrown private equity funds, Kedaara Capital.
Back in business school, our professor looked just like you.
We wanted to name it Behind a Mountain Peak. So we wanted to outlast us. We always say bad news first to our investor. People who have given us money because it's our fiduciary responsibility. So if there's something going wrong, they need to know.
Most founders who've really done an exceptional job have been also very focused on talent and people themselves. There are very few people who can be pioneer, scaler, and factory owner at the same time. Maybe a Bezos, maybe an Elon Musk, maybe Zuckerberg.
Always recruit people who are smarter than you. Because what will happen is they will provide you the leverage and they will let you bring capabilities to the organization which will help you grow faster and faster. Like if you look at what Fog did, right? Two massive giants, and they just came out and said, only 1 point they said, you get more. See, the beauty is, I feel that if there is trust, then nothing else matters. And that's, to me, is what is the best part of this relationship.
Hi everyone, welcome to a brand new episode of the BarberShop. Today I have with me Nishant and Sunish, founders of one of India's most successful homegrown private equity funds, Kedaara Capital. I've always heard about them from the outside. I'm meeting them for the first time. But amongst the founder community, amongst the investor community, amongst the startup ecosystem, and amongst growth stage, both promoters, investors, and management teams, Kedaara has an absolutely stunning reputation of being a partner of choice. With investments in companies like Manyavar, Lenskart, and including like very established businesses like Parks and Packaging. Their first deal was in Mahindra Logistics, and after that has just been looking upwards. I'm very, very excited about going deep and understanding the world of private equity in India and how they see Kedaara going forward over the next decade or two. Sunish, Nishant, welcome to the BarberShop. Thank you so much for taking the time and coming here. I know we took a round of the office before we sat down for this, and one of the things that came out when we discussed as a preparation for this conversation was around culture, which for private equity, which is usually a smaller, leaner team, is not something which is mostly top of mind for founders.
Yeah.
But would love to kind of hear your thoughts on that and what you thought of the culture at Bombay Shaving Company in the 10 minutes that you worked there.
I would say, let's start with the Bombay Shaving Company and then go into the Kedaara culture, which we are extremely proud of. I would say what at least struck me as I walked through this was how charged up the team was, how motivated the team was, and how aligned the team was. And to see that in a startup is very, very refreshing. And very, very refreshing because if you see the startups that have succeeded, usually you'll find it's the team. There's no one individual that can create the success. And there's the same thing at Kedaara. And I would love Nishant to talk through some of that. So I think that's basically what we found was, at least I found, very, very unique and very, very interesting. So it gave, like, I would say a sense of purpose and with a sense of belonging to the team. And I think when those two come together, I feel magic happens.
Yeah.
I think that's my first quick reaction.
I think I'll just make one preface, Shantanu. Back in business school, when we had our leadership class, our professor looked just like you. His name was Scott Snook. Okay. He had no hair also. Not that I held it against him, but
I think it did well for him.
But, at that point I used to think touchy-feely culture stuff is, really beyond, people like us. I couldn't really identify with it. It was like, hardcore numbers, analytics, Excel. And over time, in the last, I guess, 20 years since I've graduated, with the passage of time, how important culture is in truly building something which is lasting has really, dawned on me time and again, both when we've failed, when we've succeeded. And that's why I think when we started Kedaara, for us, culture was such a core ingredient of, what we stand for. When we walked through the hallways of, Bombay Shaving Company, the fact that everyone can be themselves, right? Everyone felt like they were pretty much sitting at home.
Yeah.
And having, conversations without really thinking twice, just being yourself. I think that's something which was quite evident.
Yeah.
And similarly, I think from a Kedaara standpoint, I think what we're trying to do is also build, sense of psychological safety.
Yeah.
Like people feeling that they're at home. We haven't gotten to the level of liberation you guys have gotten to. Hopefully we get there. With just completely open offices and, having dogs in the office, having cats in the office, which people have at home.
Yeah.
But we're in the middle of, I think, like you said, building something quite unique from a private equity context. It's a low bar, but, from the point of view of just building truly a distinctive institution, not just India, but from a global standpoint.
Tell me one thing, I want to actually dive deeper on this transition with over, and you call it a 20-year transition, which gives me a sense that it is a gradual one.
Yeah.
Where you go from being a 20-something, and I know McKinsey kind of, and we're all alums, right?
Yeah.
It kind of, for the right reasons, focuses on the hard aspects of business initially, right? When you're associates or when you're kind of in the junior level of hierarchy, the numbers matter, details matter, and it's ingrained. And as over periods of time, and that's also a period when you kind of, you're right, you look down upon, softer aspects. Is the transition to realizing that it's actually the softer aspects that make really long-term differences to institutions? Is that transition a gradual one for both of you? And these may be different answers. Or are there moments over the last 20 years for each of you where it suddenly hit you that, okay, there is something deeper here?
It's a very, very fascinating question, actually. And I'm reflecting as I'm speaking. I would say the one minor difference to what you're saying I would make is I feel people make the difference. Culture brings the people together. And I think it gives them a purpose. It gives them a belonging. It gives them a belief. So I think if you think about it, we, for example, always look at cultural fit. Of course, everybody wants smart people in private equity. You want people who will take ownership, drive it. But you don't want I, me, myself, right? You want we, us, and the team. Those are the kind of people that we feel will go ahead and do a lot of very, very unique things. That's why when you come into our office, and hopefully next time we'll get you there and spend some time with our team, you'll see it. There's no politics. People are all working together. You don't have to tell anybody to deliver on stuff, work on stuff. They take the ownership. And I think it's the quality of the people and it's the culture, which is like it's the fluid running through the organization. It's the blood running through the organization. And I think that's where we always say that we don't care if XYZ is the smartest person. If he does not or she does not fit, we don't want those kind of people. We want people who fit with our culture. We want people who are imbibing the culture. And we have people who are culture carriers, who will bring the next set of people. And we spend a lot of time on recruitment, getting the right people. And the biggest thing we spend time on is cultural fit. Our guys are trained enough that they'll do all the analytics checks, the capability checks that happens. But a lot of time where the three of us spend is largely around cultural fit, the kind of people that we have. So I would say that's the way, at least from my perspective, I think about an organization and how you can build success in an organization.
For me, Shantanu, when I started my investing journey, at that point, I was still trying to figure out whether this is the long-term gig for me. So for the first couple of years, I remember when I interned in GA, Sunish was actually the one instrumental in kind of opening my eyes to investing, right? Otherwise, I had zero clue of what investing really meant.
Correct.
And at that point in time, I was just creating a model without really thinking through what is driving this model. Ultimately, there are people on the ground who are, owning up a certain function or a responsibility. They're the ones driving the numbers.
Yeah.
But there was just no appreciation of that linkage.
Correct.
It was like you're building something, in vacuum. And then, as I got a little bit more experienced, there was sort of, for lack of a better word, an investment that didn't go as per plan. It was a failure, for lack of a better word, right? And that was predominantly driven by, not having chosen wisely the person to back, right? It was someone who essentially didn't follow through on their responsibility to their stakeholders, us being one of them. So, some element of learning as you tasted some success, but a big failure which at least personally made me realize that, look, eventually who you back is as important as what you back in our business. And this who you back is a very subjective, mysterious sort of exercise in judgment.
Yeah.
So how do we, as a team, and how do I individually build some combination of art and science around it? And that's when culture became one of the enablers, because culture is nothing but a summation of all the people at the end of the day, starting from the founders. Then as you add people, either culture will accrete or it will dilute.
Correct.
And that's what we focus on. How do we make the culture accretive, and how does it keep evolving as a summation of all the people within the firm? So some of this is just things that have, evolved and dawned on us over time. At least for me, it was, I'd say the first 3 years were a remarkable sort of inflection point in recognizing the value of softer aspects in culture.
I always wonder whether, and one of the classic examples for this is, I don't know whether you've seen the media mogul Simon Cowell. He's a judge on the Got Talent and X Factor. I think he's a creator of all of these shows. Britain's Got Talent, America's Got Talent. He's like the meaner guy. Like he's the owner person, and he kind of gets other people to judge with him. I think, he's gotten Piers Morgan and all these people. But eventually he's the decision maker. And he's brutal with people who come and prepare for months and years to come and present their talent on television.
Yeah.
Until he became a dad. And that was a turning point immediately when you saw him and people know that he's got a great eye for talent. He's a guy who found Harry Styles and then, I forget the name of the group. I forget I was just missing it. The world's largest pop group before BTS was found by him and kind of backed by him, and he's created them. So his eye for talent remained the same, but it got layered with a sense of empathy that came from one moment, which was when he became
being a father.
Yeah. So is that something you guys feel that when that happens, that your ability to kind of be a leader of people, there's a significant change?
I think it was definitely a change, for sure. I mean, I think the level of responsibility and attachment and love that you feel for your kids. So I have an 8-year-old daughter, Kea, and 5-year-old son, Behan.
Okay.
And so they're, fairly young. And that's in some ways a good thing, because, when I was slogging it out as an associate, at that point in time, the only thing I could do was just slog.
Yeah.
So when Sunish and I got married, and we'd known each other for 10 years, and we eventually had Kea and Behan, I think it was a turning point in terms of sort of reflecting and thinking through the responsibility towards them. But it was also, it happened actually after Kedaara was born. So in some ways, Kedaara was a baby well before, Kea and Behan. So in some ways, Kedaara has sort of been the first baby just purely from a chronological standpoint. And therefore, the sense of responsibility actually dawned much earlier, at least in my case. Kea and Behan's coming into our lives was actually a amplifier of that responsibility. But to a large extent, I think it's personally for me, helped me be a lot calmer, patient, understand a lot of things that, you can see. I mean, I think our parents say that you see a lot of your own reflections in your kids.
Yeah.
And therefore you can see the good, the bad, the ugly part of your own personality in the way they behave with you. And that allows you to be a little calmer when you're dealing with difficult situations, at the workplace. So it has played its part, but I think in just the way things played out for me chronologically, Kedaara sort of, became such an important responsibility and part of at least my being, that I had to think about how to raise this baby much before, Kea and Behan came into my life.
For me, it wasn't the case, like Nishant said, because the babies came before Kedaara. So 2 came before the third one came. Okay. So the older one is Siddhant. Yeah, so older one is Siddhant. He's 18. He's just going to college.
Oh, wow.
So we're going through a very interesting time, which is tough for us because he's the one who binds the family very well together. And the younger one, Antara, is 16. So
where is he going?
He's going to Brown University.
Oh, wow.
So he's quite excited. He's going there. So he's got He thinks he's going to study economics and maths. We'll see what he studies once he gets there. That'll be interesting to see. So I would say when kids come into your life, a lot of people say it'll be a turning point. And I think I can describe it even better for my wife than I can for me. And I used to meet her. She's a children's book author. She used to work in the corporate world and then started writing books for children. Now she's 24 books published. So she used to, when we were expecting her first, she used to compare kids to dogs. Then when she would see somebody's kid doing that, she would say, my dog also does the same thing. She grew up with 4 dogs at any one point of time. And I used to tell her, say it, but say it softly to me. Don't say it to them. They may or may not like it. And I think she was always worried whether she'll be a great mom or not. Because I was always a kids person because I grew up with my nieces and nephews being born around me. And she was not. And I can tell you, she's the best mother one can imagine. Or my kids can hope for in terms of caring and things. So I think a switch turns on. And then you realize there's somebody you love unconditionally much more than you love anything else in the world. And you can do anything for them. But at the same time, you have to be very conscious around the values because that's the only thing you can leave with them, right? So you can say it's the culture at home or the values, whichever way you want to call it. And I think the focus around making sure that happens and they grow up, they will do masti, they will test your limits. To Nishant's point, they'll check and see what they can needle and how much they can needle. But as long as they grow up with good value systems, good beliefs, a good foundation of culture that you've built on, you find that makes you feel more proud. You feel much more proud of them than you ever feel about your own achievements. And I think that's why what Nishant was saying, we have 3 babies, each of us. The third one is Kedaara, right?
Yeah.
What happens in Kedaara, and that's why if you see, we didn't name the firm behind any of our names. We wanted to name it behind a mountain peak. So we wanted to outlast us. We are very clear that this is a legacy we are creating, which we have to leave for the next generation to take over. Not our next generation. People who work in Kedaara, they have to take over and they have to run and build probably even better than what hopefully we leave for them. And I think that's to us the underlying philosophy, underlying belief. So yes, does it make you calmer when you have kids? I would say yes. But more than calmness, I feel it gives you a lot of responsibility. It gives you a sense of purpose. It tests you every day. It's an everyday testing. And you realize that, look, things will get better. Kids will show you emotion, but they also love you as much. As long as you create something beautiful, it gives a lot back to you. And I think that's what we're trying to create with Kedaara. And
that's incredible. I do want to, I know a lot of people who are watching may not fully know the story of Kedaara. Could you talk about what you wanted to build when you guys got together? This is what, 2011, 2012?
Yes, end of 2011.
2011, right? How was the market then? Because it seems recent, but actually now if you think about it, it's like 12 years back, right? Someone told me this very interesting thing, that 2011 is closer to the .com boom than it is to today. It blew my mind. I was like, that is crazy, because that's the year I graduated from college. Wow. I'm like, 2011, this seems like now. But it's just like, it's a good way of time.
Yeah, time just flies.
It absolutely flies. So what was India like in 2011? What was it like what were your backgrounds like? You guys obviously all worked together.
Yeah.
Why did you guys choose private equity to build an institution? I know it's a loaded question with like a lot of parts to it, but if you guys could just kind of double click, it would be super helpful.
I think it might be worth just talking about our journey together.
Yes.
I think that brings the whole thing. And maybe I can start with the journey together and Nishant will tell you how Kedaara happened. So then you get a flavor of both sides. So both of us, as you know, are Delhi boys, right? Born and brought up in Delhi. So after business school, I joined McKinsey, same as you. I spent
Which business school was it?
I am Calcutta.
You are Calcutta.
I am Cap. So joined McKinsey right after. It was a small firm at that time, not as big as it is today. I think including our batch of 12, it was 42 people.
Wow.
And when I left them at the end of 2003, it was 110 people and we thought it was a big organization.
And how long was that period? How long were you?
7 years.
Wow.
So in 6.5, nearly 7 years. And we worked together very closely at McKinsey. Nishant joined in 2001 and he'll give you a little bit of his background, but very, very closely.
Were you like his EM or?
Yes.
No.
I was the BA, Sunish was the EM.
No.
So that's how we worked together. But more than that, I think we just had a lot of fondness for each other, to be honest. I think it just clicked. I always give the story that the 2001 McKinsey, as you know, like any other organization, was in a tough spot, and there were very few active clients, and I just happened to be serving one of the active clients in Hyderabad. And Nishant was staffed. We were 4 staffed with days. So Nishant was staffed, and he was in Delhi, and he would keep calling, give me some work, give me some. Why have you been forced to take these people? And his persistence was just insane. And I think just the kind of person he was, a humble, down-to-earth human being. We just hit it off really well. And that's how it started, our working together. And I've seen him the same humble, down-to-earth, very simple in his views and beliefs. So that's where the friendship started. And a lot of people think that we are brothers because it's surname.
Yeah, that's what I thought. Because I thought I did not know what you
So we are not actually brothers, but like brothers, basically. Like he's probably, my kids have played more with him than probably anybody else.
Wow.
So they've seen him grow up. They're extremely fond of him. So it's literally like family all through. So then we worked together for a couple of years. Then we went our separate ways. Nishant went to Gates Foundation. He was part of the founding team.
I was in the show In Search of Karvinder Kaur.
Oh, wow.
It was quite
That's incredible. Actually, my wife works on the Gates Foundation.
Oh, okay.
Yeah, she's hence the entire sanitation investments for them for Asia. So
It was one of the most sort of fun and, learning times. Because from a BA in McKinsey to being a program associate in Gates Foundation, working with actually really, really bright McKinsey people.
yeah.
But
Shivanshu with her?
Shivanshu was there, yes. Shivanshu, we us actually joined together.
Shivanshu, they're your batchmates.
Yeah, we were flatmates in Boston in HBS together.
Oh, wow.
With a very, very dear friend.
Wow. Very
And again, amazing human being.
Yeah.
Really down to earth guy.
Yeah.
and
So then I left at the end of 2003 and got into private equity. But it was by chance. I just got called from General Atlantic, which had just started the India office. I was the second Indian employee there, third overall employee. Then moved one guy from another office. And I still remember, I didn't know what private equity was. I got this offer. I was traveling like crazy in McKinsey. At those days, we used to go Monday morning, come back Friday night, and barely did much work in Delhi. Used to travel all over the place. And I got a call. I interviewed with them. They liked me. And I called a colleague of ours from McKinsey who was at that time with Warburg, Nitin Manan, and asked him, what do you think about private equity? Are you liking it? Do you like this firm? Do you know General Atlantic? And he's the one who helped me make that choice. So I joined General Atlantic at the end of 2003, start of 2004, after 1 month of leave from McKinsey. And then again, we worked together at General Atlantic. Took a little
you were just back from
convincing-
business school.
Yes.
During business school, I convinced him to do part of his summers with us at General Atlantic. So, as you can see, he was very, very fond of him. So that time he wanted to do biotech. He'll tell you how his thoughts were evolving. But then we started working together. And from then onwards, always together. So I would say 2006 onwards, everything together. So pretty much all our private equity lives, I would say, is together. That's basically what we've been doing. So
Yeah. Maybe I'll just add to, a little bit of, I'll fill in some of the, we keep joking between us whenever one of us introduces, ourselves, it makes the other guy's job so much easier. In financial terms, like you get operating leverage on introduction. But
When we did the prep calls, we were in a car.
yeah.
And like, coach, Sunish is saying, if I lose the ground, I don't want to do that.
Exactly.
so much together, no?
Yeah.
Now we complete each other's
finish each other's
sentences
sentences.
easily.
It's just,
As you saw, we just finished that. Sorry.
so like Sunish grew up in Delhi, I ended up, belonged to a family of teachers. My mom, was a primary school teacher and she was an all-rounder, both at work and at home, would do everything. My dad was a Hindi and Sanskrit teacher. So while I've lost touch with Shuddh Hindi and Sanskrit, but in some ways, both of them have had a really, really big impression on me. And I have 3 older sisters, very, big difference. My older sister is 12 years older. She's a doctor. Then the younger one is 10 years older. She's a teacher. Then 6 years older again, she's a teacher. And therefore, sort of
a heavy home.
yes, very teacher heavy.
Did they teach at the same school you went to?
No, they didn't.
Because I've always seen kids who have teacher parents like kind of stricter, academically a lot more disciplined. Was that something that played into?
I guess it was a combination. They were, differing forces because I was the youngest in the family, by parents or my mom would get teased that there was an eternal quest for a son that I have a fourth kid. So the impression was I was pampered, but obviously my father was very strict. He would be, like I would get whacked around if I misbehaved in any way. But then, there was a switch that came on when I became older, when he became so fond. So sort of seen that entire journey. But I've always been, really, he was one of the, the warmest people I know. So it's always sort of, a lot of what is attributed to me is because of him. But then, as I grew up, I realized doctor to was KNE because I saw my sister, training to be a doctor was really, really hard.
And you were a kid in school and so on.
Yeah. So then I said, ki chalo, engineering try karte hain. IIT, happened. And midway through IIT also realized that engineering is also not my calling.
Which year were you? Like
this was 96 to 2001.
Okay.
When I was in IIT Delhi. But it was one of those, seminal experiences. I think, very fortunate. And you always think about decision points in your life when, either you make that call or just some power makes that call for you. And you're grateful for that path. So, very grateful that I went to IIT Delhi, met a bunch of really, really good people there. Didn't decide to pursue engineering, decided to pursue something in business and management. Again, was fortunate enough that I got an offer with McKinsey. I made it to the final rounds in Capital One, Deloitte rejected. McKinsey was the third option. And it just so happened that, everything fell in place. And those 2 years were phenomenal, like Sunish said. Again, if I hadn't had the chance to work with him on that study, I think things would have been very different, right? Because we got an opportunity. And then since then, for the last 20 years, we worked together pretty much, other than the time I was in business school and Gate Foundation. So very grateful for some of these opportunities because it could have been very different. And that would have led to me, me to a very different path. It just somehow, luckily, I discovered investing. As he said, I was keen to pursue. My story in business school was because I had done biochemical engineering, biotechnology. I had, worked a little bit in pharma, in McKinsey with Gautam actually. Yeah. And then Gates Foundation. The business school story was, about healthcare and pursuing something in healthcare. So I was drinking my own Kool-Aid, as a young 25-year-old. Then I went to business school, thanks to him, got exposed to private equity. I still did an internship in a biotech firm. It was another matter that my girlfriend at that time, Sirisha, she was also an IIT. And it's almost like the story of two states with Chetan Bharat, right? Her father was a professor in IIT Delhi. She was in San Diego.
He was?
I was in San Diego. And I luckily got an internship in San Diego at Biogen IDEC, which was so I split my summer, GA and here. And then, decided eventually to, join private equity, initially in New York with GA and then move back to India. But if Sunish hadn't pushed me at that time, I would have probably chosen to go in healthcare, which would have obviously, turned out differently than this. But because I ended up getting pushed by certain, people who I've always respected and admired a lot, it's something which is important because every time I realize and look back, some of these choices have been influenced by people you really think highly of, or you've learned from, right? And that's enabled me to sort of discover my passion, right? Investing is now something which is second nature, right? I feel it's such a privileged position to be in that position to back great entrepreneurs in taking good businesses into great institutions that stand the test of time. Being a partner of choice for talent that depends on us, for people who give us money. So it's really some of those which I feel really grateful for.
Tell me about this. This sounds a lot like, and
whether there's another similarity. Both our mothers are also teachers. So it's my mom. So there's a lot of similarity.
Yeah. Incredible. And no wonder people think you guys are brothers. Yeah. But I do want to talk about, and this is something that I think about a lot, which is co-founder relationships. Like, what makes them click? And did you guys know when you guys are starting Kedaara? And to talk about Manish as well.
Yeah, of course.
And did the three of you kind of start together, or one of you joined later on, or did both?
All three of us started together.
So talk about the co-founder relationships that were there in 2011.
Yeah.
When you started. how did you decide that this was a team that's going to do it, and this is what we're going to do because this is what we see in the market? Like, could you talk about that a little bit?
Yeah. No, so I think
whose idea was it? Like one of the three. It can't be like all three of you thought of it at the same time.
Yeah, no, of course not. Maybe you can start, Sunish, and then I
No, I would say first, Manish also worked with us. So 3 of us worked together in McKinsey.
Huh.
So we all worked together in McKinsey. We knew each other.
So it was the AP on the same study. Yeah. Sunish was an EM and I was a BA.
Wow.
So we were all on the same study.
Wow.
So we worked very closely. And then, interestingly, our offices, when we were at GA and he was at Temasek, were in the same building, which is where the McKinsey office was also, Extra Stars. So we were in the same building. So we used to meet often, talk often. And we had a very good personal relationship. Our 3 spouses are very close. So end up spending a lot of time together. So I think we had started talking way back in 2008-9 that what is interesting, where do we see opportunities in India, exchanging notes. It started more with exchanging notes and where could be some interesting thing. Infrastructure at that time was booming. We were talking about whether that is an interesting area. But what happened was the catalyst probably happened towards the end of 2010, where we started actually discussing more actively that is this something that we want to do from a perspective that there were very few homegrown Indian private equity firms, domestic private equity firms. And if you see any other market, there are a lot of domestic private equity firms, right? If you look at China, there are massive amounts of domestic private equity firms. US is all about that. Europe is all about that. Even Brazil has a lot of them. So our view was there is going to be a very interesting opportunity, especially because the way the market is structured, you have an opportunity where you could do deals where the global funds may not want to do, just from a size, scale, or mixed perspective. We felt there could be a very interesting opportunity. That was the genesis of this idea. How it came together, frankly, was more, we just felt that let's do something together. It was not as well thought through as it may come across now in hindsight. And that time it was that there is an opportunity. Let's give it a shot. Worst case, we go back and work with some other firm. It wasn't like this is a business plan. We are going to execute on this business plan, etc., etc. It was honestly not that well thought through.
And I think if you had applied the classical McKinsey framework, we would have probably not stayed glued to our seats, right? Because it was just so cushy, we were privileged to be in, firms like General Atlantic and Temasek, great learning grounds, phenomenal, firms, a lot of, really great investors to learn from. So a lot of, I think, our training that we had in investing in particular, I think we owe a lot to GA, where we cut our teeth. But because ultimately human beings are emotional, we're, sort of a balance of rational and emotional. The fact that we didn't run a spreadsheet, the fact that, we didn't apply our over-analytical mind, and we said, look, this is an opportunity to do something entrepreneurial. And like Sunish said, honestly, उस time पे कुछ clarity नहीं थी कि, will this even succeed? Will this even get off the ground?
Yeah.
So, and coming from middle class backgrounds, I think our thinking was honestly middle class in terms of now, I think having gone through the distance, we think very audaciously because we've covered that distance. But this time, honestly, we didn't have the gall to think very, very big. We said, let's get this off the ground. Let's do something which we can truly call our own. Mm-hmm. And then we'll take baby steps at a time. So, at that point, it was just saying that India mein exits are very difficult. It's largely a minority market with no real operational insights or expertise. Can we solve for that? And people have generally kind of paid whatever they could, haven't really been as disciplined on, entry. So disciplined on entry, disciplined on exit, and value creation in between. Right? That was really sort of as simply कि उसको उस पे हम differentiate कर सकते हैं कुछ. And that's how we started, the concept of Kedaara. In fact, we sort of left GA earlier. We left GA end of September. Manish, I think, joined in November, I think. Yeah. Right? That's when he did. So we'd obviously started, everything was done and dusted, just about executing that. And then we started, we partnered with a global firm called Clayton, Dubilier and Rice, which was also set up in 1978. It's like, like a KKR or Blackstone, the same pedigree. People like Jack Welch, who were an operating partner there, said that instead of reinventing the wheel, can we benefit from 40 plus years of learning and insight that could help us truly build a similar firm in the Indian context. So that's how we started.
And what does that partnership mean? Like, so does that mean that they were investors or?
So they basically gave us, their partner capital, right? Which is essentially, in the private equity parlance, we are a GP, which is the people here, Manish, the team, right?
General
So,
partners.
we contribute money in our funds. They also contributed a part of that through their partners.
Okay.
Right. And then we have something called as carry, which is sort of, as we invest in businesses, whatever profits are made, 20% of that is the carry that gets distributed amongst the team.
Correct.
So that there is a small share of that goes to them as part of the arrangement.
Okay.
Right. But the idea is, how do we truly operate as, for all practical purposes, one firm where we can leverage each other, them also for expanding their portfolio into India, looking at opportunities which we have an India angle, where we've also, been helpful. So that's really the symbiotic sort of relationship that existed.
And also they had a very deep learning and experience, like Nishant was saying, on the operating side.
Okay.
That's what we felt was India was at a stage and scale where that could add a lot of value to our portfolio. So when we started, a lot of people questioned, will buyouts happen in India? Because we went in saying that we want to do a control-like situation.
How is it?
That's what, in 2011. Today it's parlance and everybody says India is a good buyout market, etc. Those were some of the most important questions that were being asked of us. But we felt the market was changing. People were realizing if the next generation is not interested or wants to do something else, it's better to give them cash or create wealth for the family and let them do what they want, because then they can at least prosper much better. So I think that learning was coming into the Indian ecosystem and the Indian entrepreneur system. And entrepreneurship was taking off. India was, you could see the excitement slowly emerging. But we got a lot of questions around that. That would people be willing to sell large stakes to you? If they sell large stakes, how would you exit the business, etc.? But we felt that was the right set of opportunity, was differentiated, etc. And that's where we launched. Spent a lot of time. Actually, the firm got launched, our firm got set up on 11/11/2011. So 11/11/11.
Oh, wow.
It just happened. We didn't plan it. It just happened to be on that day.
Yeah.
Real start happened in 2012, but that's when we registered the firm. And then we started hiring people, and not just the three of us, the 5 people who pretty much started with us when the firm started in the next 1 year who joined us are all there today.
Are you serious?
All are there today. Not even one has left Kedaara. That's why the foundation of culture on which we have built the firm, where people feel that they have an opportunity to grow, they have an opportunity to contribute and an opportunity to create value, there is very visible to them. And people, a lot of firms across sectors lose people. That's one thing we feel very proud of. That people enjoy coming to Kedaara. It doesn't feel like work. They're very excited. They shoulder responsibilities for tough times for each other. And they celebrate each other's successes. When that starts happening, I feel a lot of positive things happen. And that's what I think is quite unique.
It's quite it's quite incredible, because people who join early stage businesses join for potential.
Correct.
Right? They don't join for performance, which is current, because there is none to boot. They have a very different DNA compared to people who join, for example, who join Kedaara today.
Yeah.
And oftentimes, sometimes institutions grow faster than the initial team, including founders. But in your case, like the 8 of you, the 5 plus the 3 of you, have kind of stayed the course and grown with the institute, which is I think rare, right?
It's very rare. Private equity is very rare.
We're fortunate, I think.
Very, very
I
fortunate.
mean, that everyone's been together. And I think it's the case because there's a sense of belonging, there's a sense of ownership, and people feel that, everyone's sort of, part owner of the firm, for lack of a better word, right? And people feel that, look, we're building an institution that will stand the test of time. That institution is represented by the 8 of us today, but 30 years later, it may be a different constellation of people. And at least our endeavor is to engineer for that, right? Because in most businesses, sometimes founders and the senior folks end up becoming too focused on themselves without really programming the institution to be built for lasting success.
Correct.
So at least in our mind, we're very clear that we want to build Kedaara for lasting success and focus on, hopefully, whether any of us are there as founders or not, but Kedaara sort of survives the test of time.
Talk about your first deal together.
So the first deal we did was in a company called Mahindra Logistics.
Okay.
This was after quite a few deals that came close but didn't close.
Didn't close because you guys lost out in a competitive process?
In some cases, we lost out on a competitive process. In some cases, we were probably not that aggressive or that comfortable. In some cases, the deal may not have come together. So while we started in 2012, we did our first close in October 2012. Our first deal only happened in March 2014. So it took a little bit of time to happen. After that, they happened very fast, one after the other. So I think we were also probably getting a understanding or building comfort with each other's style. Nishant and I had worked together, but from a private equity perspective, Manish and three of us, or two of us and Manish had not worked together. The rest of the team had not worked together, other than one person who came from General Atlantic, Pareen, and one person who came from Temasek Karthik. So I think there was a lot of getting comfortable with each other kind of a situation. But this was an interesting deal because this was largely a captive business to Mahindra. We felt we do a lot of thematic thinking around what is very interesting, where a lot of value can be created. And we felt that if India is to grow, logistics has to grow. There's no other way, especially e-commerce was beginning to take off. Yes. People were beginning to leverage all of that. And we felt that credible brands would create disproportionate value in that area. So it was a captive business, largely doing Mahindra work. The 10% non-Mahindra work that they were doing was also largely for, like if they were sending their Jeeps to Chennai, they would bring back cars from Chennai for somebody else, basically to make the assets utilization better. And of course, they had some third-party business, but very small. And we felt that that's a very, very powerful brand. On that, you could build a very credible third-party business, especially because it was an asset-light business. They had a lot of dedicated fleet, but they didn't own any or very little of it. So we felt that the underlying economics were very strong. ROC of the business was very good. Brand was very strong. So we could work with them to build a very attractive third-party business. So we carved, it was a third-party entity, but not a focused third-party entity. We brought it, worked with them, helped them strengthen the team, selectively did a little bit of M&A, grew the business along with them. The third-party business in the 5 years scaled roughly 6 times, 7 times. Mahindra business, of course, provided a nice cushion to the whole thing, but that grew very rapidly. And then the business went public, traded at a very attractive price. We made a lot of money on that transaction, but it was a very good learning. Also to work with a group, showcase that we can build value, even in a large group. I think that set a good precedent for us to do the next set of few leads.
And I think, that was also an example when we really worked as one team, because it wasn't like we had a lot of people. There were probably,
how big was the firm at that time?
Maybe like 8 or 9 people, 10 people, something like that. And everyone was playing some role or the other, right? We were involved in, diligence. Anand, who, led the deal, was doing a bunch of things. Anand Gupta.
He's an angel in art.
I know. Yeah, of course. Yes. So he led that investment. Aman Gandhi, who's also one of our first sort of team members. He joined us, in February of 2012. He was involved. Karthik was involved. I was involved. So it was like everyone was playing a role or the other just to make sure that we get it over the line, right? And that sort of spirit has continued, right? It's always been about, being a team, right? Recognizing that, investing is a team sport and not driven by individual brilliance. And I talk about this in the context of our cricket team. Like, New Zealand as a cricket team.
Yeah.
It's truly a team, right? There isn't someone who outshines the other as a star. They really come together from a Southie to sometimes a McCullum to sometimes a Williamson. But in our cricket team, there are a lot of stars that adds to the volatility, of the performance in that sense. So to that extent, I think that spirit, that value, that culture is kind of resonated, right, in the form of the way we operate as a team, right?
Incredible. And just give a sense of the construct of that deal. Like, how did it come to you guys? How much did you deploy? What percentage of your fund was it? And how did you guys make that decision? Did you guys partner with other funds as well?
So going forward, we did, but at that time, it was a relatively small investment, right? It was it was a $500 million fund, and this was less than 10% of the fund. So about a $40 million deal, give or take, right? So small deal from that standpoint. But like Sunish said, I think we wanted to make sure that from the first fund perspective, we get everything right, because we were trying to make sure that the investment process, the investment strategy, the returns, all obviously from an intent perspective, stack up. It was a minority investment. So it was, in the first fund, we did 9 investments, out of which, I'd say About 4 or 5 were either joint control or control investments. The remaining were minority investments. So this was one of the minority investments. Significant minority where we took,
27.
27 odd percent stake. So to that extent, I think it was a great experience in doing it from end to end. We were also working with one of the most reputed groups in the country in Mahindra's. And we were partnering with them in truly taking one of their unlisted businesses, and helping them, build a third-party business. So very unique situation. It helped us then to really continue to build on that thematic thinking, like logistics that Sunish thought of. When I talked to you about entry value, right? At that point in time, logistics was not as sexy an industry as it is today, even delivery and so on and so forth. So luckily, we managed to get a relatively fair price for both the buyer and the seller. But we also build on that thinking, saying, look, instead of the gold mine, can we invest behind the shovels? For lack of a better word, right? So we did packaging after that as a team. Parsons, Manjushri, logistics.
For Manjushri also,
So we kept building on that theme of how do we get the same underlying growth and momentum, but not pay the 30, 40x EBITDA multiples that consumer companies end up getting traded at, which was something which helped us eventually deliver a really strong return.
And on your other point, how it was sourced, it was a one-on-one negotiated deal. We had identified the opportunity. We spent time with the group. We convinced them to give them credit. They basically said, look, go convince the CEO that you can add value. He wants you. Then let's agree on some construct that makes sense. So it wasn't a process that was being run. It was a simple, straightforward, one-on-one negotiation. And they felt that we could be the right partners. And I think if you were to talk to them today, they'll probably tell you that we did contribute our fair share on that deal. But it was a good, exciting first journey. Learned a lot from them. Hopefully contributed a lot to them.
How do you contribute in a minority situation, in a control situation? Yes, but in a minority situation, it's about exercising influence and intellectual kind of support, right? Networks maybe.
It's very interesting that you said a lot of people, we always say, look, either it's relationship or respect that helps make change happen.
Okay.
So relationship you build over a time. Respect comes if you have contributed or done something similar. That's why we have a very strong pool of operating partners, which are CEOs who built some of the most interesting businesses in India, admired businesses. So that time there was one of these individuals, Sanjeev Aga, who still works with us, was an operating partner, who had taken 2-3 consumer businesses in tough situations and done a fantastic job. He had turned around Leo Mattel. He had turned around VIP and made huge gains there. Took on Idea Seller in a very tough situation. From number 7, it went to number 3, created a huge amount of value there. So he was involved with the deal. He and I were on the board. So the CEO could see that he would add a lot of value.
Wow.
So that helped get us the initial buy-in to what we were saying. And I think as we engaged with them, helped them on specific initiatives like building the management team, improving systems and controls, helping evaluate M&A. A lot of times we said no. And some of them have turned out to be very good companies. Some of them we dodged a bullet. But at the end of the day, decision was CEOs. We never feel that we should do backseat driving. We can give our recommendation, our thinking, why we're saying. They have to decide whether it's yes or no. It's their decision. So we worked on that also. And I think that's what helped us continue to grow the business. Of course, we helped in business development. We leveraged our contacts, all of that up. But I would say if you really look at fundamentally where we helped was around strengthening the team, strengthening the systems and controls, selectively helping them on M&A and business development. Those are the areas. And that theme, I would say, runs whether it's minority or majority, frankly, we do this. Whether the company does not need help, even if we are majority, frankly, we are the happiest. And if the company needs help and we can contribute, we are the happiest. So our view is that.
Yeah, I think like you said, influence is really the core driver, right? Adding or trying to add value for the sake of checking a box or saying that we add value is honestly counterproductive.
Correct.
So it's really horses for courses where each situation has a different set of priorities. And sometimes what is working well doesn't need to be disturbed in any way, right? So there are situations where our involvement is just limited to, let's say being on the board and really adding our inputs as a board member. But there are equally situations on the other end where we're involved in building out the full management team, from the CEO to the CXOs, and then helping drive either organic growth, M&A, and so on. But I think the denominator in all of this, Shantanu, is the fact that we think of ourselves as thoughtful, understanding partners who are going to stay through ups and downs, because life is never a straight line. It always goes through ups and downs. And it's important to be together when the chips are down. Because whether you call it creative ideation or problem solving, eventually it requires collective thinking to really get out of that zone emotionally, physically, mentally, in every which way. So that's really been a common element. I think you'll find there's a lot of, unlike many other firms where there's a lot of focus on numbers, analytics, and so on, there's a lot of focus on that, plus softer aspects that drive those things, right? So the unpeeling of the onion to say, okay, why does this, what drives this? Ultimately, numbers and analytics are driven by people and how they think about some of this stuff.
And it's a very simple philosophy, I think, that underpins what we do. And we say use that and it works quite well, which is do what is right for the business, value gets created. Always focus on the business, always focus on what is right for the business. Don't worry about, if you have to do CapEx, even in the year that you might be doing an M&A trade, do the CapEx. Don't worry. People try and cringe on stuff, pull back on stuff, it pays you multifold. Because one, who knows whether the deal will go through or not. And therefore, you don't want to start again after 12 months or 6 months, etc. Second, the buyer also knows, right? They are smart. They know that you're doing it, you're investing there, or they will deduct that much amount as they think about it. That's what we have always said, do what is right for the business. Simple philosophies, a little bit like what you have, as you have talked through what you have built, which is quite remarkable. I think we try and do very, very simple 2-3 things we follow, and touch what they've been good for that.
That's what I think also, right? I think the investing community, whether it's early stage venture capital or growth stage private equity, or even public market investors, they're amongst the smartest people. One, because I think the recruiting pool is kind of what it is. But also I think because there is such a strong confluence of horizontal experience and vertical depth, right? I feel entrepreneurs, including myself, I feel entrepreneurs don't leverage it as much as they can. And I keep getting reminded of this over and over. So I have to force myself to work with investors, and it's not easy. And my context is maybe different from your portfolio, but oftentimes entrepreneurs feel कि यार investors से बात करेंगे तो what if I disclose something which the investor doesn't like? What if I show a part of my repertoire of insecurity or vulnerability or failure, which the investor doesn't like? So you kind of close the door and say, okay, my relationship with you is fiduciary and I'm responsible for returns, but don't look into the business deeper than you need to. Is sometimes an easy approach for entrepreneurs, and oftentimes you're tempted to, but what? I'll tell you where I've used my investors, right? So for example, Toshan and Harpreet. Harpreet is the founder of CoCubes. Sold to Aeon. He wrote that book called Let's Build a Company. And Harpreet is the one connected to Anant, by the way. IIT Bombay friend. So Harpreet and Toshan did my first 3 or 4 people evaluations. I told Toshan, you head the people committee in McKinsey, so please come and spend 1 day a quarter with Harpreet. So all the, reviews, everyone wrote their own review of themselves, and, the criteria, the EPR version, got them to do that. Then Arjun, who sits on our board from Reckitt's side, was the one who launched Gillette Guard in India. So I was like, hey, this is cool, man. And so I got Arjun to start working with our team to do our razor launches this year. And he has been just phenomenal because the insights he brings on the table, I don't think we would have gotten through any amount of problem solving or, our own fundamental first principles, right? The third thing is we now have a leadership team of around 10-20 people, all of whom need executive coaching, including myself. And I'm like, boss, 27 McKinsey partners who do this for a living on our cap table, who are more than happy to engage. I've gotten Vikas Badoria, Toshan, Kumra, like all of these guys who would,
charge and, arm and a leg. I would never get access to that. Right?
Correct.
Why don't you just spend, so Toshan, for example, helps my CEO with communication as a specific, and I'm like, you need to work on verbal, non-verbal, written, everything, right? And they've got to be. The good part is for the coaching is great.
Yeah.
But it makes the investor group and the leadership team very close together.
Correct.
And I think that's far more valuable than anything else. And I'm like, boss, there's so much more. So every time now I meet founders and all, I'm like, you have to find ways, because if investors are just spending time on making deals and making money for their investors, that's great. But I think the founder community loses out significantly if we're not able to leverage them for their intellect, experience, and all of that stuff.
So I think people need to view us as a partnership. Yeah. And I think that's when you start viewing it as a partnership. And in every partnership, there's always ups and downs, tough times, etc. But you work together, you keep moving up. And I think that's where I find that's what we tell our guys, that where we invest. Look, we are there to help. You don't need our help, we would be the happiest. But if we can help, we would definitely want to. And then the other thing we always tell them, we'll tell you what we believe. But when we walk out of the room, it'll be one voice.
Yeah.
Because that's the other thing which is very important. When you walk out of the room, you have to be one voice. It can't be an investor's voice is different than a management voice, than a founder's voice. When you open the door of the boardroom, it's one voice. You can have all your debates, all your discussions, all your thing, because at the end of the day, company can't go in 3 different directions. It will only go down there. It has to go in one direction. Now, that direction may have a very bumpy path, may have a little bit of a bumpy path. Smooth paths though won't be there. So it depends on where you would go. So I think that's the philosophy, very simple philosophy that we follow. And that's why I always said, do what is right for the business. We always keep saying that. And business comes first. Business comes.
I think, like you said, I mean, it's a ultimately, it's a two-way street.
Yeah.
Right? You took the initiative of really engaging your investors with your team, right? And ultimately, we end up, obviously, given it's a two-way street, we end up having to defer that to this confluence, for lack of a better word. I think there are situations where we're really deeply involved and really leveraging the strengths that we bring to the table, as well as what, sometimes the other way around comes. Because it's as you said, when you get close, it's a two-way street, right? Yeah. You can also share stuff and you can get advice the other way around as well. And that's something which I think we've tried to, at least in our minds, program as much as possible. Saying, look, here's the 4 or 5 things that we think we're good at. But also equally recognizing these are our limitations, right? Most of us, some of us have had some operating roles, but most of us haven't been operators, right? But we have the benefit of people like Sanjeev and Pramod and Govind and Aditya and so on, other operating partners who've run really large businesses. So we try and complement that and offer that to our founders and to our management teams. But it's important to also acknowledge the limitations, what we can't do well or what we don't know well, and therefore focus only on what we think we can truly help in knocking out of the park, right? So just clarifying that in terms of building systems and processes, like Sunish was saying, enhancing management capability and bandwidth, right? Helping with certain introductions, really helping on the culture and sort of team side, right? Which is related to the management part. But really just focusing on those areas as the needle movers, as opposed to trying to, look at a much larger set of things.
A founder, I won't name him because it'll become problematic. I told me that investors, maybe there's an early stage versus late stage maturity thing. He said that early stage investors ko company ज़्यादा मत दिखाओ because they want to invest in promise.
Right.
And investors as a community are generally risk averse. In the sense that they're looking for reasons to reject, and that's fine. That's just the way they are. But when an investor comes on board, and you sometimes are banking on them for your next round, like they're your Series A investors, but they appetite for the Series B, don't show too much to them, because then you should keep the first date charm on as long as possible, because the relationship is not going to culminate for a while, and early stage businesses have a lot of mess, and sometimes the mess, like investors don't have the maturity to look beyond the mess and then like it's just red flags all over the place, and then backing you again becomes much harder. But do you guys agree with that as a characterization for
private equity perspective or investment?
Is that a distinction that we made?
I think a little bit, yes. So I would say, see, at the end of the day, you have to think about both parties are on the same side, not opposite side.
Correct.
My view is, we always, even to our investor, maybe we'll start there. We always say bad news first. To our investor, people who have given us money, because it's our fiduciary responsibility. So if there's something going wrong, they need to know. We don't want to hide it. We don't want to think it. So our view is always bad news first. And good news can follow.
That's much harder said than done.
It is much harder, but you will be surprised if you will talk to our investors, they'll tell you we follow it quite actively. Now, the challenge that happens when you're running a company, you probably have a lot more challenges. In a private equity scenario, it's probably a little bit easier on that dimension. So our view is always treat them as partners and problem solvers. If they are going to just come and give you the money, then frankly, you have to think if this is the right set of investors you want on your captive. I think that's the first fundamental question you have to ask. If that's all you're looking for, then frankly, most people will just go for value maximization. Color of money is green. It does not matter. There are people who have leveraged investors and done a beautiful job of it. They have thought about who do they want on their captive. Who is the one who can add a lot of value? A little bit like when you brought in a couple of strategics, right? They can add a lot of value from multiple dimensions. If you think through it a little bit more actively upfront, it goes a much longer way. That's why a lot of times the investors that are the most respected are never the investors that pay the highest. Or seldom are, I wouldn't say never, seldom are the investors who pay the highest. But these are the guys who help create, who should be able to deliver more than the discount that you might be giving to bring them on board in the value that they help you create.
Correct.
And I think if you take that philosophy, that's one thing in partnership, it'll work much better. Now, if you get into a mindset of hiding, the only trouble you'll have is every time you'll have to hide a little bit more, add a little bit more, and a little bit more, and a little bit more. One will start eating you up. You will start thinking twice on what you say when you say.
Yeah.
The more open a relationship, more transparent a relationship, the better it is. Because the truth is, any good investor knows that the path is always with some hiccups. Path is not a smooth path.
Correct.
Every smart investor knows. There's no question. They are fundamentally looking at what? See, think about it. They are making a decision, in your case, even faster, early stage. Even in private equity, making a decision between 4 to 8 weeks. Maybe in some cases, assuming some of the diligence is already done. You're backing the position in the industry, hopefully a leadership position, the entrepreneur, the management team, and the ability or the proven track record of execution. In some cases, very strong, in some cases, decent. And you're saying, okay, can I take this and make it better? And take a good business and make it better. I think that's what you're backing. So I think my personal view is more open a relationship, better it is. Be comfortable that the path will be up and down a little bit. And if the investor is not confident with that or not comfortable with it, they are not the right investors for you in any case.
Yeah.
That's what I would say.
I think it's the difference between a transaction and a partnership.
Yeah.
Right? A partnership has to be based on mutual trust.
Yeah.
Right? And a transaction can be just a one-off based on negotiation. You win, I lose, some game type of. That's not the business. At least personally, I feel any investor is in, right? Whether it's an early stage investor or yes, the deal velocity is different. The level of information is not there, all of that. So you're really using a very different set of data points to make the judgment. But eventually, it's a partnership. It has to be based on trust. I think both sides are mature enough to realize that whatever happens before the investment is just a trailer, right? It will never be the movie. The movie will play out post the investment, right? And that happens both for the investor and the founders and the team, right? Because in reality, that's, to your point, the charm of the first date, whether it's a series of dates, it remains because you're kind of on your best behavior, generally speaking, right? For the whole period.
Yeah.
Both sides are doing diligence on each other at some level to saying, look, are we meant for each other or not? But truly the real test is post-investment when things become real, right? You start you get married and then you start, having your daily sort of,
you get to know a lot more.
It's live together, for lack of a better word, right? So So to that extent, it helps if you know each other as well as you can. It'll never be 100%.
Correct.
But it just helps because then the path forward becomes that much easier, right? Otherwise, you feel that, look, either something has been withheld, or whatever, right? So at least like Sunish said, I fully endorse his point of view, is to really build it on trust and respect. And, both sides should have the maturity to acknowledge that. If you don't, then I don't think that's a reflection on either side. It's just a reflection on specific either people or stage of maturity.
The other thing is, once the deal happens, it's a marriage, keep in mind.
Yeah.
So the first date is translating in something which is much longer to for sure. So I think my recommendation to everybody is trust the other side is also smart enough that they know. And if they're not, then frankly, maybe they're not the right investors for you in any case. Look, every successful startup has gone through some transition, version 2.0, version 3.0. I'm not even talking about private equity. I'm talking about startups. Look at how many times your business has gone through changes, right? Look at Naveen Tiwari, another guy that all of us know in Mobi, how many times that has gone through. Transition before it became in Mobi, etc. I think every business goes through that. So I think that's a given. So getting good investors who understand it and take it as a true partnership. You're doing a marriage. Marriage needs adjustments on all sides for it too. Even if you've dated for 10 years before that, marriage is still very different. Right. So forget the first date. I'm saying even if you dated for 10 years, living together is very different.
I agree. What did the three of you realize, or the eight of you maybe, given that you guys did a lot of the first stuff together? And maybe you can keep it to this relationship and then you can talk more about Manish and the larger team. Stuff that you realized about each other, both good and bad, which you did not anticipate before starting Kedaara together. Because that's the thing about even co-founder relationships are likely or in bed together, right? So
correct.
You find out really there are surprises both good and bad. In your case, can you enunciate?
No, absolutely. I mean, I think like Sunish was saying earlier, maybe I can start and Sunish can add. While we are sort of, for lack of a better word, joined at the hip, right? And we truly respect each other. But we're different people, right? We're just a function of nature and nurture. That equation is different for me and different for him. So there are times when we have a difference of opinion. But because there's mutual respect and trust, we always figure out a way to deal with that, right? But it's actually, very helpful and refreshing to be able to have a no-holds-barred conversation, right? Without sort of feeling that the other person would feel bad about it. Or, can I say this or not, right? That thought has never crossed, right? That's the element of, at least between us, psychological safety, right? One could argue whether that's extended all the way through the organization. Probably not.
Yeah.
But it's getting there. I think between the eight of us, again, very high degree of psychological safety. Maybe, again, not to the level of 100% between us, but I think maybe 90+%, at least if I had to put a number to it, where, if I look at if you take, our two example, I think what I admire about Sunish is his ability to connect with people, right? He can really charm the other person, really strike, a conversation, build in a matter of seconds, not even minutes, a great guy. And, I've always tried to learn and adapt it to because I can't do that, right? It's just not something which I've been blessed with, right? But how can I learn from that and, incorporate that in the way I'm trying to, build relationships, right? So that's something which he's obviously also very, very analytical, very quick, with numbers, very quick-witted. So all those are strengths which really help in building that. Equally, I think there are times when, there's an element of, a strong point of view, right? Which both of us have actually, but I'm just saying, given we said, it does take time to, convince him to see the other side, right? But there is complete openness in looking at that point of view. And depends also on, if it's me telling him, then I think he'll be more open. If it's someone who's probably not had the same level of trust and respect, it may be different, which I understand, having sort of gone through this journey, right? So that is something which I think is one area. I think the rest of the team, it's obviously unique. It's different situations, but the interesting part is we're very complementary, right? If you have an aligned value system, then complementarity really helps. If the value system is not aligned, then complementarity is second order.
Yeah.
But if the value system is aligned, then complementarity around the fact that maybe I probably think a lot more about what drives people, the softer aspects, and sometimes that can translate into a certain level of passion or aggression, right? Which I'm sure Sunish will allude to, because that's something which I get a lot from everyone, right? Sometimes there's passion and aggression, the boundaries get blurred, right? And can be unreasonable at times. But that complementarity, Manish is sort of, again, someone who sort of goes out and meets a lot of people, right? He's much more outward focused than inward focused in terms of his sort of style and approach, right? And that's something which, similarly, if you look at the next 5, each of them have their own strengths. But maybe I'll let Sunish first. I think there is point of view.
I think the first I'll talk about us, because I think that's an important element. See, the beauty is, I feel that if there is trust, then nothing else matters. And that's, to me, is what is the best part of this relationship. Like, I can get angry with him, he can get angry with me, he may not agree. We leave the room, you forget about it, there's no malintent, it was based on either passion or view or belief, etc. You don't even think about it, frankly. It doesn't even cross your mind, you don't even remember it. Sometimes you go back and say, we had that discussion, we forgot about it, etc. Let's just complete that discussion. To me, the truth is, I don't have it with anybody else. That's an absolute truth. I don't have it with anybody else. I think there are other people in the office that we are getting there with. And I think over a period of time, we'll get there with. I know a bulk of the office, like Nishant said, is 90%. This is 100%. This is 100%. There is absolute no malintent. There is absolutely no malintent. And that, to me, you feel blessed that you have that kind of a relationship. You really feel blessed, because then you don't have to watch your back ever. Because in a co-founder, you don't want to have that situation. That's the worst part of the thing. And there's never that situation. If something happened to me, I know he'll take care of my kids. He'll make sure the bill is executed. He'll make sure whatever needs to get to them. Frankly, even if it comes out of his own pocket, I know it'll happen. I don't even need to think about it. It's like, won't even cross my mind. Ever. So I think that, to me, is what makes this relationship special. Do we have arguments? Of course. Whether it's deal related, people related, etc. And to me, that's very important. The worst thing you want is both of us start speaking the same language. That's the worst part.
Yeah, but on fundamental intrinsics, you guys are aligned.
Value system where rock solid.
Exactly. That's what I would
And when has it ever been pushed? Has the envelope on that been pushed?
We pushed on the margin. Like, he might have a belief on somebody who might be better, or I might have a belief on somebody who's better. But it's never been that he thinks this guy is the God's gift to mankind, and I think he should be fired. It's never been that extreme.
Spectrum is always kind of
It's never been that extreme. You have to remember, when you work together for 22 years, right? Before he enters the room, I know what his mood is. Or before I enter the room, he knows what my mood is. And that's why the other beauty is, nobody can play games between us. Nobody. They can try whatever they want. Nobody can play me up. And to me, not that anybody tries, but I'm just saying, even if somebody were to try, and you'll see when you spend time with the rest of the organization, you'll see why we feel so blessed. Why people stay for so long. Where everybody knows we are moving in connection. So I think that, to me, is the beauty of this relationship. And it's a fact, I don't have it with anybody else. I don't think I'll have it with anybody else, to be honest, at this level. I won't. I have people who are 90% there, etc., but not 100%. And maybe they'll get to 95, 99, etc. But this is the benchmark to be seen. In terms of what I feel Nishant does exceptionally, I would say the focus that he brings and how he can just narrow down and focus on something and getting done is exceptional. Like, I can't. I need 2-3 things happening same time. I need to do one, then second, then third. That keeps me going. He can really focus down and say, look, this is one thing and don't bother me. I want to get this done. I want to focus on it. Get it done, which is very, very unique. Analytical skills, brilliance, etc. That's table stakes to me, that he has, of course. But to me, that's one thing that differentiates him. And second thing is the softer aspects is he's really done a phenomenal job in building the people side of the Kedaara story, culture side of the Kedaara story. He's done a very, very good job. He's taken the ownership and really driven it to the next level. Where they are doing stuff today which I would say probably global private equity firms don't do, who've been in existence for long. Like, how are we thinking about the culture of the firm? How do we build the culture? How do we pay for or engage on the individual development of everybody and say how they can each be successful?
One of the most powerful things that I've kind of felt as a founder and realized it over a period of time, and something that McKinsey did beautifully was invest in success of people. And just it's something that we say very flippantly sometimes. Yeah, I'll invest in your success. Or you read in books and people talk about it a lot. But actually doing it even 80% well is one of the most incredible unlocks that you will see in that person's true behavior, attitude, skill set, everything. And then most importantly, their attachment to the shared purpose. How do you do it at Kedaara? When you say we invest in success, you explicitly do it so people know that Nishant, Sunish and Manish want, like, for example, you've said multiple times that the constellation of leaders of Kedaara might not be us in 15 years or 20 years. And that's usually an issue with private equity or in general, any firm which is partnership driven.
Yeah, we've preached to others, but we don't follow as an industry.
One of the things I think
on carrying this is concentrated at the top, just those 10 people, or whatever. And that's fine. It is what.
To give you an example, first, let me answer your first question, then I'll answer your second question to the best, and I'm sure Nishant will add to it. Do we invest in the success of the people? My view is that's the only reason they stay.
Yes.
Because these guys are very, very smart. A lot of people try and recruit people from Kedaara. Seldom successful, if at all. Senior people, though, not successful. That's the reason, because they feel they can build long-term careers. They feel that they have the opportunity to lead the firm. At some point, they really believe that we will step away.
What are the tangible things that indicate this? Like that?
So I think, one, how far the carry is shared. So I would say not just the investment team, our admin staff also gets carry. We are the only firm probably in the world that does it. And it makes a huge difference to them. Because that amount of money going to them and it's been starting distributed, they can basically send their kids to better schools, better colleges, or get safety in terms of slowly building a place for themselves. It creates a good safety net for them. That's why our admin staff is also very stable. A lot of people don't realize that. We seldom lose any of our admin staff also, because they have been there. And the truth is, they make our life easy. Frankly, they know you. They know when you land in Delhi, what the same driver, if he shows up, he knows where your parents' house is. These are the 5 places you want to go to. You don't realize you save time, you save efficiency, and they know it. They will get it done. And that's what we feel, that it's not just, you have to invest in the success of not just the top management, you have to invest in the success of people. And that's a philosophy that needs to go penetrate across the organization.
That is generosity that may not be expected, but once it happens, I think it is just so powerful.
It's like action speaks louder than words, right?
We don't talk about
it. We try and let the actions speak, because sometimes disproportionate focus on words. I think we're obviously, being in private equity, we have to speak, but we probably are a more listening organization than a talking organization, if I had to index it. We also, one of the things is most firms in private equity don't have what is called a people committee, right? We have a people committee, which was there pretty much since inception. I've led it from day one, along with sort of, in right now, Anant, Ashay, and, our talent director, Amita, is on it. So the 4 of us. But we're thinking constantly. We meet every week thinking about how do we attract the best talent? How do we nurture them? How do we retain them? How do we develop them? We tried personally we have right now about 30 investing and operating, professionals spend half a day every Monday meeting each one of them. So every month you recycle, right? Every month get through the entire set of people. So you understand what is on their mind, developing the way they should be, what is bothering them, how can we do things better? So right here, feedback, can we do something different, right? This time around, we did a, externally facilitated brainstorming exercise, which is done annually. And the result of that is, we're going to be doing coaching with a lot of, sort of our team members. So they will take on coaching because it's such an individual thing, right? I mean, each one has different set of development needs, priorities, strengths. How do you sort of, prioritize that? We started doing spouse retreats last year. It was Gulmarg last year. This year we'll go to Istanbul. We do an investment team retreat. Because I think sometimes, again, everything is predicated on a bond. bonds just don't get formed over transactions.
Yeah.
They get formed over actually time outside of the transaction. So how do you find that time? Right. So some of that is what we've tried to program in a way where you really truly build long-term bonds and, use that as a springboard to do great work.
I remember when Ashutosh joined, and Ashutosh has actually been very instrumental for Bombay Shaving Company in ways I don't think that he realizes. Sardesai.
Yeah, of course.
So Ashutosh was at Lighthouse.
Yes.
Okay. And this is 2017. When we were probably a 15 lakh per month business. Around some in this tool now. So Ashutosh was very excited about us. We were at IM Luxor together and we must, we must evaluate and I said, sure. And all our investments except for the last one have happened like this, with me just talking to some friend of mine or someone just coming to office or whatever. And Ashutosh put me in front of Mukund and Sean and Mukund and Sean.
Sachin, I guess. Sachin
is not there. Just these two guys. And Mukund and I have remained good friends. They were also ex-McKinsey and all that, right?
Correct.
And I told them the pitch or whatever. But dude, you're too small, man. You don't do that small. I said, no, Ashutosh knew, and Ashutosh was like, yeah, but I just thought that it could be whatever. And that didn't happen. Okay, but Sean, I think, wanted to, but it didn't fit the thesis or whatever. And then Mukund connected me to a guy called Cal Vapori in New York, who then connected me to Colgate. And that's how the Colgate deal happened.
Wow, interesting.
And that was one of the most fundamentally changing points for the company's trajectory, was to get Colgate Palmolive globally into the business. It was just helped us so much. But when Ashutosh got moved to Kedaara, I remember him telling me that, hey, I'm moving now and this is so much, I'm just so excited about this. And just the reputation you guys have. Ashutosh is of course a close friend and that story holds, but the reputation your firm has amongst founders, amongst the community is just absolutely stellar. But it brings me to another point, right? You're right, actions do speak louder than words, and middle class India has been coached in being humble, feet on the ground, don't. But I do believe that there is power to telling these stories because it influences possibly the next 50 people who are setting up their own funds to think, okay, this is how carry should be distributed. And that's the huge long-term benefit of keeping the best people close rather than kind of concentrating wealth in just the GP or just the top field. So you guys should talk about it a lot more. I'm so glad that you're here doing it. Because it's genuinely important. Because private equities, I think like China, we'll see a lot more homegrown funds over the next 15, 20 years.
Absolutely.
And if they are able to kind of take off from where you saw the learning that you have on what made you successful, then it does well for everyone.
No, absolutely. Absolutely.
What are some of the, you made 9 investments in the first fund, right? And what's it been like after that? What's the lifetime number of deals that you guys have done total?
25 investments.
If I were to ask you, what is the commonality between good founders that you back or good promoters that you back? Because I used to think that there's a lot common. I was just realized that success has many shapes and forms. Right? People are really different.
Correct.
Like really, really different. Like I would never, like for example, I'm like Mr. Sanjeev Juneja. He's the founder of this company called Case King.
Of course.
There's an episode a few weeks back with him. It's done so well, right? So he sold Case King to Emami for a 1650 crore kind of a thing. And then started his own set of brands again, reinvested, called Regisa Laboratories. I think he runs Page Safa, which is like almost 50 crore pack business per year. And he runs Dr. Ortho, which is like I think a 70 crore pack business per year. So very nice, very cool insights and that kind of guy. But they're like, I don't see my phone before 4 p.m. every day. And I'm like, is this a function of success? Like, clearly you're doing it. I mean, it's like a couple of people who value it. And this guy kind of look at his phone and he doesn't believe in distribution. He's like, I only believe in wholesaler relationships and marketing. Distribution, they will manage. And that's so different from, for example, a Colgate or a kind of pretty genuinely involved class distribution.
Correct.
And Akash and his father, Mr. Chaudhary, the Akash Institute founder, again, very different approach to education. They said, student first. While education today has taken an educator first, like a teacher first. Like teachers is the center of gravity over an education levels.
Correct.
Like student is the center of gravity. We take feedback and we commoditize teaching, which very few people will actually talk about that way. Right? You know, teachers are commodities, students are gods. And I'm like, wow, that's interesting. So for you guys, of the 25, talk about some of the most interesting, maybe counterintuitive founder strategies or things that surprised you about people. But what kind of, what was the commonality, if any, amongst people who did well as founders?
Commonality, I think, is, if you really look at it, it's typically been people who have very strong beliefs in their own businesses. Where they, I wouldn't say eat, drink, sleep their business, but basically have a very focused approach around their business and have figured out how to be a market leader in some segment. It doesn't have to be a market leader in India. It doesn't have to be a market leader in every category. But like, if you take the example of Ravi Modi, he's a market leader. He's a Manyavar founder.
Yeah.
Market leader in ethnic wear, right? He said men's ethnic wear,
I'll own it.
I'll own it. And he's literally owned it, right?
Yeah.
And the rest is history, what market cap that company had. Or if you look at, for example, what we've done with GK in Vishal Megamart, he basically said that, look, India, the real growth is coming at price points which are very different, which are the 99 to 999 price points. That market is infinite. I want to make sure I'm catering to that and giving them a very good product. And a very good product which is as fashionable, as trendy. They were watching the same videos. They know what trends are being followed. Let's be prepared for it. Let's be ready for it. Or if you look at Piyush as an example, at Lenskart, saying that, look, I have to give a good product and it'll become a fashion. It'll no longer remain not just a need, it'll become a fashion as well. And people want to change it. People want to have different glasses. My father having the same glasses for 10 years. No, that is not there. Including we changed glasses. And you give it at an affordability price point where people will want to change. Now, of course, the product has to be sturdy, product has to be sound. It has to serve the purpose, but that's table stakes today. So I think a lot of the basics today, strong entrepreneurs understand their table stakes. Then they say, look, we'll take a niche and we'll own the niche. And I think if they can own the niche and have a focus around it, magic happens.
Now you have a sample set of 25, which is statistically significant now, right? What differentiates great promoters? What do you think is common?
Plus 8, 9 from GA days also. So over 30 now.
Yeah. And do you guys do angel investing also?
Yes. A little bit.
So now that gamut of collectively maybe one plus.
Quite a few data points. I think, given the McKinsey training, you can't help but come up with a framework. So, what Sunish explained, I'll try and put it in a framework at least that helps me understand it better. I think at least in the way I look at it, there are 3 elements, right? There is what I call as the drive quotient, which is the hunger and sort of just the Jasba and Junoon as it's called, right? Which I think in all our successful founders, they're the most over-indexed on, right? That is the most important thing in a founder, which runs across each and every founder. Then it's the emotional quotient, which has a bunch of things around how do you lead, how to communicate, listen, talk, who to, really, how do you share success, how do you be truly, like a leader, right? That's probably the second most important factor that we try and assess for, and that runs across all the successful founders. The third is intellectual quotient, which is, at least in our experience, and I'll speak for myself, important, but not necessarily, you don't need to be a rocket scientist, right? So, conventionally thinking maybe the other way around, that IQ is probably most important. That's how you ace exams and so on and so forth. But IQ is frankly less relevant in the exam of real life.
Yeah.
Right? There, the drive, the hunger, the persistence, and the emotional quotient really is far, far more important. Most people we have backed have been smart, obviously, but none of them have been in many ways, off the charts, NASA variety, right? Or rocket scientists. But they've been definitely over-indexed on these 2 aspects, whether it's Piyush at Lenskart, whether it's Ravi at Manyavar, Sachinder at Aavas, Manish at Purple, Dr. Prashant at Oliva, Dr. Arun at ASG. There's many, many, many different, entrepreneurs. But clearly, the drive quotient, the DQ greater than EQ greater than IQ. I mean, that's the framework that I wanted to share.
I completely agree with you. In fact, and that the initial part of our conversation where we kind of index on IQ so much, and then over a period of time we realize that leadership is actually a lot more about just being a leader of people.
Correct.
You need followership. Otherwise, there's no other way. You can't be a great leader.
Do you guys? How do you guys? So I want to come to this. Like when you're evaluating founders to invest in, and of course you do ref checks and due diligences and all that. How do you evaluate for these three things outside of just the conversation and track record? Do you have a kind of, how do you put your finger on the pulse of that?
I think we try and build a picture, right? One is, as you said, through the conversation, and these are multiple conversations, but it's in the courtship period. So to that extent, everyone's on their best behavior.
Correct.
So you try and at least, talk to partners, whether it's a supplier, whether it's a customer, whether it's a board member, whether it's an investor, former, who've had interactions with the team or the CEO or the founder at different points in time. So you try and create longitudinal data points, of how things have played out, and you try and do it across a larger set. And it's, not just us doing it, the entire team, programmatically does that. So we try and create a picture of, who is the person that we're backing with. In fact, in our business, we keep saying, who is more important than what on the margin, right? You could be running an airline business, but still make an Indigo, right? Versus running sort of Oracle and still perhaps not do as good a job, right?
Correct.
So to that extent, who is a very, very important part of what we do. I think this helps us at least get a sense on these three dimensions, right? And there are times when the tribe quotient is off the charts, so much so that, and IQ is also very, very high, but EQ sometimes is, different, right? I mean, you push people, whereas George Bernard Shaw says, like, all progress depends on the unreasonable man, right? To some extent. So but that's fine, right? That's who that individual is, who he or she is.
Yeah.
And their just passion kind of makes them shine through. So sometimes it's, recognizing it's a package deal. We're all packages, some over-index, some, in line. But does that package work for us? And does it work for that context, right? In a business like Lenskart, where Piyush is sort of driving the business, it's his package that's really done wonders. And in a business, which is different, like ASG as an example, it's Dr. Arun's package of very high EQ and, that massive drive that works there, right? So that context, the package in each context is very important.
Sometimes people confuse passion for working hard.
Yeah.
It's not the same. Actually, I personally respect people more who work smarter. Like you were talking about an example where the gentleman doesn't see his phone till 4.
Yeah.
We have a similar example. If you look at Ravi Modi, or if you have a chat with him and you sit with him, he barely looks at his phone. There's no paper on his desk, but he's super sharp. He takes care of people. He knows what it takes to succeed in the business. Simple metrics that he keeps improving on. Like one of the things he figured out very early in life was whatever was succeeding, because there's a lot of embroidery involved, it basically takes 2 months to get it back into the stores. So how do you reduce that to 7 days? How do you figure out what's selling early? So I think there's a simple things that if you eat, breathe and sleep that business, it comes as a second nature to you. And I think that's where you will find a lot of successes come, where people inherently understand what it takes to succeed. Of course, bumps will come along the way. Some you'll anticipate, some you'll not anticipate. But I think people who can think smartly around that specific business, usually you'll find will do well. The other thing you'll find is people who are more focused than more broader, usually end up doing better. Like rather than running 5 businesses is very difficult. Building one business itself is a challenge. So you focus on one business, build it out, rather than trying to have multiple businesses going at the same time. I think sometimes people make the mistake that they have 2, 3, 4 businesses running at the same time. Focus on one business. If you can compound the business, the amount of value you will create for yourself, your family, your shareholder, and your stakeholder is going to be disproportionate to having 4 mediocre businesses versus 1 successful business. And I always tell all our entrepreneurs and all our things, it's the power of compounding. Don't underestimate it.
Yeah.
It's the simple clocking every year 20-25% return. The company in 25 years is very, very different. Like what your father was part of a team that was there when TCS went through his primitive years, right? And you see where the business is today. It's just the power of compounding, or HDFC Bank, the power of compounding. And you just keep clocking the returns again and again and again. And what you have in 20-25 years in your lifetime, not even for your kids, in your lifetime is something which is phenomenal. So I think that's what we focus on now. Of course, if you are a good leader and you have followership, it makes it much easier. And one basic, simple thing that you can check is what's the attrition level at senior level. That gives you a very good indication of followership. Every company has attrition, so you can't say that there should be zero attrition. But if the people keep changing again and again and again, then I think that's a challenge. Or, for example, you are very clear that, look, there are some gaps this entrepreneur has, but he has so much clarity on some of the other stuff that frankly you have to work with those gaps and you have to find a different set of people that might work. Like one of the mistakes a lot of people make is you should only get very experienced people to work with entrepreneurs. Some people just work better with younger people. So you just identify it, focus on it.
Yeah.
That's the set for him or her, right? And you just work to adapt and you find your own things that keep you going. Or some people work beautifully with older people who they really respect, value, take advice from. So I think that is the other nuance that I feel sometimes is missed. Everybody believes that you have to get the similar set of people to work alongside. It does not work. That's why to your starting point, entrepreneurs are very different. All of them are very unique. That's what makes them special. And it takes a lot of guts to be an entrepreneur because you are putting a lot of risk. And once you start down the journey, you have to commit at least 5-6 years, right? Before you'll even know whether you're on a path where there'll be some light at the end of the tunnel or you have to change your paths altogether.
I think one other area which I want to just, one of the things which has really, again, been a common factor is most founders who've really done an exceptional job have been also very focused on talent and people themselves, right? And that's something, whether it's Anuj at Care in our situation or Arul at Veritas, Dr. Arun at ASG, Ravi, just the focus around making sure that, this is really about building a great team of leaders and helping them succeed. I think that's also a very important aspect of successful founders.
Yeah. No, for example, Hemant Jalan and Indigo Paint, right? Quite contrary, right? Because he's the kind of person who works very well with younger people, right?
Correct.
So his son, Parag, also a McKinsey alum, once described it beautifully to me. I think this 2015, 2016, long back when I was just starting my company, or about to leave the firm. We had just joined the firm in New York. And I only companies doing so well. I think by that time, I think they were hitting 600 crores top line or 500 crores, all of that, right? Couple rounds of funding, acquisition, this, that, and the other. So I was like, how's his leadership style? Can he be a firm client and so on? At some point, it'll be good to serve him and so on. So Parag is like, nahi yaar, after that, 300 employees. And now they're like, it's like one DCS and 300 MCKs. Everyone reports it. There are no layers. There are 300 people who all sales posts, all they don't roll up to him. They report into him. I'm hoping that it's you can't do that now.
That's param control as you grow.
That's a so, but I can imagine that being this tremendous ability to kind of work smart and be so involved in the business.
But that's why I think we also come across this, Shantanu. What happens is there are certain styles which work from point A to point B, point B to point C, but they don't work from point C to point D, right? So it's about, I guess, the horizon,
correct,
right? And I mean, even if you look at global companies these days and you look at sort of the typical cycle of longevity, I mean, it's come down from 40, 50 years back in the day to now 20, 22 years where, truly a corporation can continue to be a top quartile performer consistently.
Correct.
It's shrinking because of this reason.
Someone put the framework someone put on the show was pioneer scaler factory owner. So 0 to 1 journeys are pioneer journeys, are creative, a lot of experimentation, and you kind of reward yourself on breaking the rules. Scaler is when you have found PMF in a way and kind of go at it in 100% growth every year. And then factory owner is then it becomes utility.
Assembly line.
It's efficiency. That's when you're like, okay, now efficiency will drive value creation. It's not going to be everything else. Then
It's a good way of describing
that's
it.
very interesting because I see that happen with us also now, right?
Yeah.
So now, from 0 to 250 crores, I think is a journey of discovery and so on. I think 250,000 crores will be one of, kind of just focusing on what I call boring tasks. Shaving foam bechna is, in the larger scheme of things, is not the most exciting thing in the world. You have to make it exciting. I will do things like BarberShop and like 50 other things, but really kind of make sure that you differentiate yourself from your competition. And 1,000 onwards, I think we'll have to become a different company again where at that point, I'm hoping that, investors like Reckitt and Colgate who operate on negative working capital and our Reckitt is just one of the, they're also like, they're clients of ours because we run Durex for them. I can see the way they negotiate, how they manage cash. Every small line item is kind of, itemized and clearly negotiated in the discussion. So I told my team that this is a very cool learning experience for us because we should be negotiating with our supplier and our manufacturer and our vendors and everyone who we work with.
That gives you the buffer. If you have that, then you have a lot of buffer to innovate, you have a lot of buffer to spend, you have a lot of buffer to take chances, which you can't.
Exactly.
Yeah, it's almost trade-offs also, right? I mean, that innovation as an example, the kind of innovation you guys are doing sometimes is not possible in larger companies, right? So it's always about a trade-off. There are no free lunches anywhere, right? When you're trying to, at that stage, this is important, then you have to trade off something else for it, right? Because making it this very cookie-cutter assembly line, processized business will then take away a lot of the creative, aspect. I mean, we always keep thinking about this, right? Everything is with a trade-off, no free lunches anywhere.
Well, absolutely. For example, a lot of the large auto companies today want to have built out electric vehicle technology and want to kind of, and it's changing every month almost. And I meet some of these promoters or I meet some of them socially, even formally through McKinsey or whatever. And they have a classic, thing, yaar, हमारा ये core business है. इसको हम हाथ नहीं लगा सकते. अब ये अलग innovation करना ना, इसके लिए let's recruit separately and put them in WeWork. That's not going to work. Putting a team in WeWork is not the way to build out innovation. But you're right, like for those companies to innovate, which is why companies who are super innovative even at scale, are companies which are very rare.
But I think a lot of people also don't recognize that how the market changes, how consolidation happens. There's the same EV two-wheelers. There were 2,500 companies in China in 2010. There were 250 in 2015. And today 5 control close to 70% of the market. That level of concentration comes in very, very rapidly. And M&A will happen. Somebody will succeed, somebody will fail. Because at the end of the day in this, you will need scale, right?
Yeah.
That's the only way you're going to be a market leader.
That's profit will be not great.
That can't happen. And also, there's a lot of charging infrastructure. There's a lot of support that you need to build in. And I think that will only come with scale. That's why I think as you think about an idea, people should always step back and say, look, is this a scalable idea? It may not be a scalable idea for the country. It may be a scalable idea for one geography or one segment, etc. That's good enough. Because given the size and scale of our country today, you can build a large business just on that. But it should be a scalable idea. Niche is very interesting. Then you say, I'm building this to be acquired because they can't do the innovation themselves. I'm the innovation factory. I will do the innovation. Somebody will acquire it. I'll make a lot of money. Then I'll do the next innovation. Then I'll do this. And some people are very good at it. They are just serial entrepreneurs where they figure out this is one niche. They build the business because they know somebody is going to buy it. Sell the business to somebody. Then go to the next idea.
Especially in software. Like people, like I know a founder, Rohit Toshtiwal on his 3rd gig now. He was at VMware, left, started a company, sold it to VMware, joined back, again with them, left, started a company, again sold it to VMware. This looked like a pretty cool gig, man.
I mean, it's like knowing your circle of competence a little bit, right? Sometimes we are unaware of what the true circle of competence is individually in some ways. And, therefore, it's important to the framework you were earlier using. There are very few people who can be pioneer, scaler, and factory owner at the same time. Maybe a Bezos, maybe an Elon Musk, maybe Zuckerberg, but very few, right? Yeah. And some of these people who are doing this maybe are saying, I'm a pioneer, let me monetize when I'm a pioneer. I'm a pioneer plus a scaler, but not a factory. So some of this is about just figuring yourself out to some extent.
Yeah.
And very few of them go cross-industry.
Yeah.
You see, they're very good at one and they know it and they continuously do it.
Correct.
And understanding what your business is itself is a big thing, right?
It's
Like if you look at Amazon, he says it very clear, I'm a logistics company at the end of the day, right? That's what I'm building. If that does not work, nothing else matters. And I think that's where I feel the clarity of thought and the clarity of thinking that's all these entrepreneurs have is just phenomenal.
Yeah.
The other thing that at least we were taught very well in GA by the guy who started GA, Steve Dunning, was always recruit people who are smarter than you.
Yeah.
Never shy away from that. Always recruit people who are smarter than you. Because what will happen is they will provide you the leverage and they will let you bring stuff and bring capabilities to the organization which will help you grow faster and faster and faster. And sometimes entrepreneurs struggle with that. I feel that be comfortable in your own skin and go ahead and recruit people who are very, very smart. They'll help you. But of course, culture has to be the underpinning.
Yeah.
That has to be the under. Don't compromise on that. Just don't compromise. It's not worth it.
Culture is such a, I completely agree. I have, because we sell Bombay Shaving Company institutionally as well, right? We sell it in pharma companies, we sell it in hotels, we sell it in a lot. So I end up going to a lot of companies to sell. And we can be clients for a different breed. And I wasn't there long enough to really recognize it. But now over the last 6-7 years, I've recognized that just a 2-minute walk through in a gives you a office gives you a very, very clear sense of the vibe of the place. You can get a sense of the politics. You can get a sense of whether people are happy. You can, at least now I've become a lot more sensitive to like just facial feedback.
Yeah.
And I can see from the faces of people, are they okay or are they not okay? It's damn hard to get it right across this, 0 to 1, 1 to 10.
It's always, to be honest, even after all this experience, it's hard. You still make mistakes. The question is you have to try and keep reducing the number of mistakes. That's all. You will still make mistakes. I don't think that's a given. You will make mistakes. And then you keep figuring out what is the kind of risk you don't want to underwrite.
Yeah.
Like one of the things we always say, any kind of concentration we don't want to underwrite. What can hit you? Anything. Product concentration. Concentration of client. Concentration of like one market, etc. You have to be very, very sensitive.
Will plan B become very difficult?
Yeah, because then it hits you very, very hard.
Concentration of risk, basically. Yeah. Right? Risk could be in product, could be in customer, could be in geography, could be even in the key person for that matter. Right? It depends on sort of.
Is concentration of risk in key person a thing? Like, do you think that people are as indispensable as?
I mean,
it's made out.
I think it's a context-specific situation. I think we've obviously done several situations where we've backed sort of someone who is clearly the key person, right, in a particular business. And we've been comfortable with that, right, because just of the nature of the person, the impact, the institution. But then obviously together you try and see how you de-risk that piece a little bit, through things like enhancing the team, conversations around succession and so on and so forth, right? So it's not a 100% sort of foolproof type of situation, but I think it's something which we feel, is definitely workable.
And it happens, right? If you look at it, part of the concentration also comes from what is the rest of the organization capabilities, right?
Yeah.
So if you have a very strong organization, then we all overestimate what our value to the organization. Completely agree. But if the organization is a little bit weak, then yes, the concentration is real. So I think contextual is very, very important. That's what I strongly believe. Well, I think... No, I was going to say, and what happens is, a lot of times when people realize and they are smart, then they will try and correct their concentration. Because it helps them more than it helps anybody else.
Yeah.
The truth is because a lot of times the entrepreneur's value at risk in that business and for his family is very, very high.
Yeah.
So I think as people understand it, we are finding increasingly that people have become more conscious of it. Maybe it's a COVID impact, or maybe it's people are just more conscious, or you see more of those people as you grow older also yourself. But you find that has become a much more real topic today than probably what it was even 5 years back.
The more I think about it, the more I agree. I think it's so difficult. Like I always find the investor's job so hard. Like it's just so difficult because it's very blind for a long time, and then I don't think people recognize how much pressure. I have begun to appreciate this a lot more recently, as opposed to earlier. I always used to think it was an easier job than it actually is. because just the information asymmetry is so high. Which brings me to my next question actually, which is, we've spoken about the good stuff with founders. But, and especially in growth stage private equity, where sometimes red flags are, kind of hidden. You don't see them. Large businesses, especially, there is misrepresentation. There are compliance issues, which is why for India, promoter-driven companies in India at scale is a tricky market to kind of deploy capital, right? We'll blur out some of this stuff. But for example, we are looking at Supermax, where Actis is just struggling at that business because the promoters just bad form across the board, right?
True.
For you guys, like, one, has that happened for you where an investment where the thesis was X but went completely off because things did not play out from a person standpoint or from a promoter standpoint or from a team standpoint? And how do you deal with that? Like, what happens in that case? How hard was it for you individually and as a firm?
The truth is always hard. We've seen it. It's not that we haven't seen it. We've seen it in our past lives at GA. We've seen it here, etc. It's always hard. But I think what you have to be very careful on is, one, you can't let it start affecting you. And when it's happening, it does affect you. It's hard. It's tougher. Second thing is, I think the best solution in a lot of these situations is sit on the table and try and find a solution together. Sometimes the solution may be more visible. Sometimes the solution may be less visible. And if you can't find a solution, then you just step back. I think beyond a point, at least our view of fighting does not help. And we don't want to fight with anybody. We don't want to have that situation. So try and sit on the table, try and find a solution. Life is too short. And if you can't find a solution, then you have to move on. And you have to realize by and large, you'll do a good job, one-off here and there. Could happen. And it could be for any reason. Maybe not because the founder was a bad founder also. It could be just the situation became tougher. Market became tougher. It could be there was some misunderstanding. It could be the view that they had was very different. And you have to respect it at the end of the day. And you have to let them drive it. So I think it's a combination of all of that, but it's tough. It's not easy to go through it. Even after 20 years of investing, I would still say it's tough.
Yeah, because think about it, right? Yeah. You guys are bad news first. So in your mind, it'll be, okay, we have X number of people to answer to. There is a certain sense of personal failure, which purely A-type people such as yourselves take much harder than, of course, the average person. Then there is, I feel that it leads to a lot of domino effects in terms of that one data point starts affecting judgment on everything else. You start looking at everything with your investor. One of the biggest skills is to have rose-tinted glasses, because that helps you push companies to achieve things that even the company may not think is possible, even as founders. But it dents that rose tint also a lot, because you start becoming pessimistic so to get out of it will be really difficult, right?
Yeah. I think, look, this is an occupational reality, right, Shantanu? So in what we do, we will have a lot of successes, but some challenging situations as well. But I think thankfully, we're grateful that we probably have less than our fair share of what, average would look like, thankfully. But having said that, I think in most cases, if I segment it in the context of a situation where you have the ability to change something, right? There are times when you feel that maybe from point A to point B, there was a certain skill set that was doing well, delivering the outcomes, but it's not going to be the same which will deliver the outcomes from point B to point C. And in that case, you have a dignified conversation, but, you obviously change tracks, right? That's just, it's honorable to have that conversation, right? Because our obligation is to build lasting institutions. It's not to be holden to any one individual, right? वो हिंदी में कहते हैं, like dad would say, माध्यम है मतलब, right? It's a माध्यम to sort of a means to an end, not necessarily the end in itself, right? So to that extent, I think it's important to have some tough conversations, but to what Sunish said earlier, if we're doing it in the best interest of the firm or the company in question, then those tough conversations need to be had. But, they're in the long-term interests of the business. And that's what we've done every single time, right? If you look at sort of, let's say another market like a North American market, which is obviously only a buyout market, there most of these folks, so Blackstone or some of the other people, they would probably have a fair bit of changeover from the CEO that they started it versus the CEO that eventually drove the ship. That's just part and parcel of what you're doing. But I think because we're human and not superhuman, we recognize that we can't know it all, right? So the fact that the two of us trust each other, but we're different. My blind spots are covered by Sunish well and vice versa. And when we expand that to include, 6, 7, 8, 10, 20, 30 people, then as a team, we are able to really push ourselves on each other's blind spots and ask some uncomfortable questions, tough questions, and take those tough calls sooner rather than later. Because, we're not in the business of holding on to an asset for perpetuity, right? Yeah. We have to sort of make sure that we take decisions, even if it ends up being sometimes not necessarily the right call. At least the fact that you've taken a decision is important rather than letting things linger.
And sometimes time is a big healer, People underestimate the value of time. Sometimes time passing creates a lot of solutions for itself. Yeah, and that should work on it. I think that as the other thing, we are a little bit lucky, I would say, is because we don't do early stage investing. So we see probably a lesser share than probably what the early stage people go through. And they have to take a call on the entrepreneur in the market at a very, very young stage of a company. We only come in when the business model is proven, when we are confident that there's less risk on the business model. So I think our life is a little bit easier. Of course, our life is a little bit harder because your competitive pool is a bigger competitive pool at that point of time in terms of companies that are competing, etc. But I think as long as you keep the philosophy that let's do what is right for the company, by and large, you'll be fine. By and large. There'll always be aberrations, there'll always be challenges, etc. But by and large, you'll be fine. And then if you have a challenge situation, you have to realize fight does not lead anywhere.
It does hurt, right? We are seeing a lot of this happen over the last 2 years. A lot of unraveling of, and you're right, a lot of it is in early stage businesses or businesses that are young but hyper scaled. Just 2 years old, but $1 billion.
Correct. Correct.
I think it's like pushing steroids down a baby's throat. Beyond point, how much can a baby take, right?
Correct.
Correct. And then just natural scale of growth. It's very different for different people, but expecting a 6-year-old to, deadlift 150 kg is not possible, right? So, but we see that happen. So that I can, in my mind, that situation plays out so clearly in my mind कि इतना valuation पे पैसा raise हुआ है because promise था founder का, market बड़ा था, and founder wanted to raise the most amount of money because there were 3-4 people coming up with the same idea, and then aggressive investors came on board. And then the investors pushed every month. And I now know what that cycle looks like.
Yeah, of course.
This quarter mein kitna hua, this quarter mein kitna hua, numbers kitne hue. And then at some point, someone makes a judgment call that does not want to show the bad news first.
Yeah.
Right? Isko dikhate hain. And then you just cross the line and then it's just
downhill from there.
Breaks so poorly, reputationally also, financially also. Success in the business also.
There's one thing that I think everybody needs to imbibe, learn, and remember. That it takes a long period to build a successful company. There are very few companies globally that have been built at very short periods of time. It takes long. It is built brick by brick. You can't create a house in one night and expect that the house will be stable, right? And I think that's where, if you shift your focus from saying, what is my value today, to what is the long-lasting value I'm building, I think you will be fine. Yeah. There'll be some great companies that will come out of India. That's why I feel that this stress that has come in the consumer internet space or SaaS space today will help some of the companies that outlast this, will come out very strong. Because the trend is behind them, there is no question. digitization is happening, Indian consumer is going on the net, Indian consumer is buying, etc. So if you build a business which is a strong business, you will be fine at the end of the day. And look at every stakeholder and focus on how do you create value for every stakeholder.
Correct.
Think about your customer, what value are you creating for your customer? Think about your employees, what value are you creating for the employees? Think about the investors, what value are you creating? And of course, you as an entrepreneur will definitely benefit if those three are benefiting. So at some level, you're not misaligned. You're actually aligned.
Yes.
And I think as you keep that philosophy, that's why every time we give the same example. Look at HDFC Bank, look at TCS. Look at any company, look at Manyavar, look at whatever you want. Look at Vishal, it's built brick by brick. You try and grow too fast. It doesn't work. Frankly, it doesn't work if you grow 60% zero, 60% zero.
Yeah.
It's very dangerous. I'd much rather grow 25, 25, 25 or whatever, 25, 26, 27, 25, 24. Another thing. And you keep building it. You'll build a fabulous business. Just an amazing business. Like Nishant was referring to care, right? Care health insurance. Anush built that business for very trying times, right? The parent was going through a tough time. He built that business. You see the value of the business today. I mean, it's a large scale, second biggest standalone health insurance business, sound foundation, very strong claim ratios. That's why he's getting the value he's getting. So I think you build it and you'll sustain it.
Yeah, completely.
Don't miss the element of sustainability of value. There is no use being a unicorn if you can only remain for a year.
Yeah.
It's better to become a unicorn 2 years later and then you remain for the rest of your life.
Another thing, like when I completely agree with you. In fact, having experience of Bombay Shaving Company, we are not a unicorn and we're not even close to it, right? But for us, I think we measure ourselves on consumer love, market share in relevant shelves, repeat rates, reviews, and kind of NPS scores of the products. And we realize that the market is large and we will always have adjacencies to play in. So every time I talk to investors, I love talking to investors because you can very quietly at the back of your mind, you can start kind of figuring out whether your business fits what, like for example, you guys spoke about risk, concentration of risk. And I'm thinking, while you were talking, I was thinking, what concentration of risk is there? And you probably keep me involved in mentally for the next 3-4 days. I'll probably need to have a chats with Deepak and Gauri and somebody like that. Do we have a concentration of risk of any nature? Which we probably might from a channel standpoint.
Yeah.
But that's why I love these conversations.
See, look at it this way. Our country is growing 6-7%, right? There's 6 or 8. It's at very attractive growth.
Correct.
So this is real growth, right? If you add inflation, you're growing double digits already.
Correct.
And if you have a repeat customer base, let's say of 70% or 80% to your business, right? Plus you have inflation. Plus new people are getting added into the consumer class.
Correct.
And a little bit of distribution. You can get very good growth.
Correct.
But why will they come by if the product is good and you're serving a need?
Correct.
वो miss नहीं होना चाहिए. वो I feel जब people miss कर देते हैं ना, then I think is where a lot of the challenges come. If that you can focus on, say, कि I'll build a great product for a price point. See, at the end of the day, you have to, our big market is where lower middle class and middle class.
Correct.
You have to have that target segment and go after that target segment.
Correct.
Build that product and continuously deliver good value. So I think that form that you've left for us to see, that's going to be very interesting.
Just thinking about it. I'm hoping no one's done that. Completely.
So I think that's where I feel that वो करते रहो. वो एक भगवान जी saying है ना, कर्म कर फल की इच्छा मत कर.
हाँ.
वो अगर फिलोसफी रखोगे ना आप, फल अपने आप आएगा. बहुत अपॉर्चुनिटी है इंडिया में फल लाने की, बहुत. We are just see the size and scale this country is going to grow to here.
I think the people had said this about India shining in 2004. It didn't really play itself out as much as one might have thought. Then the real, when you guys started Kedaara, I think that was the second wave when the Flipkarts and Make My Trip and some of those consumer businesses, I think at that time was Zoho, and I had also kind of found its feet. And then there was this whole 2015, 2016 set of companies. And now there is just I see founders today, it scares me honestly to see how ambitious and
it's truly come of age. Like we used to talk about when we graduated from whichever college we graduated from. I think entrepreneurship was not necessarily the first port of call, or a lot of people saying, look, I will start my own company. But now you look at the IITs, other universities, people are very comfortable taking that risk of jumping straight into entrepreneurship, right? I mean,
It's also got on social status.
yeah,
It's a cool thing. It's a cool thing.
exactly. So the risk appetite in general is increased, which is, I think, a very, very good sign.
Yeah.
And when you blend that risk appetite with the right capital flows and the right kind of capital, then it can create magic. I think, and to your point, hopefully, and, keeping fingers crossed that the next decade, truly all these different things combine together to realize the full potential of India. And because there's clearly everyone believes in the potential, right? But sometimes everything has to sort of come together.
Yeah. Rahul said this beautifully, the founder of Tribo. He said, the golden period of our country is going to coincide with the most productive period of our professional lives. And that is just very lucky. Such an incredible privilege. And we should just kind of milk it maximally for like escape velocities.
See, the other benefit a lot of companies have today as startups is that they're also seeing disruption of traditional channels, which are unprecedented, right? Digital today, digital first is a reality, right?
Correct.
Now, you can build a business which is digital first. You can build a business where distribution is outsourced, right? You can take on the large guys. Otherwise, how could you take on a Gillette, right?
Correct.
I mean, can you imagine?
Yeah.
The companies in the US who were before Gillette struggled to take on Gillette, right?
Correct.
And Gillette got created. But today you can and you built a phenomenally large business, right, based on that. So I think that's the opportunity that you can use a lot of channels which were not available earlier. And therefore, if you focus on all the stakeholders carefully and build a very strong value proposition, businesses will happen. And businesses will get, take the Manyavar example, right? It's such a simple thing. A lot of people don't realize the price points itself. The cheapest sherwani you can get is in that store. And we coined a beautiful term for him, which was democratizing aristocracy. One of our operating partners came up with it. Which is, you want to feel, it's your wedding, right? You want to feel special.
Yeah.
But affordability is as important because then only the market grows, right?
It took us so long, Sunish, to understand this, that democratizing aristocracy is a beautiful way to put it. Someone had told us this. It was also an investor discussion, which didn't actually go through.
Okay.
But it was a great discussion because that point stuck with people. And he said that very few companies are able to marry value and aspiration. And they always assume it's a choice. They always assume that if you're going to be value first, you're not going to be aspiration. And if you're going to be aspirational, you'll have to compromise on giving value to the consumers. Very few companies are able to marry value and aspiration. If you can do that, that's incredible. Where consumers buy a product, feel that we have premium, lekin sasta hai. And that is just
one of our businesses, which is Vishal, which is obviously a hypermarket focused on the value segment. Their tagline and what the mission, the purpose they stand for is making aspirations affordable, right? So right from a 99 rupee polo t-shirt, right, which is catering to the low middle income segment, to your point. It's exactly that, right? You really focus on what is the need, form, function, price, and you build your assortment around that, right? And it's relevant for a retailer, it's relevant for a product business, it's relevant for a service business. But that's something which I think runs through a lot of company DNAs, because it truly, to your point, helps in making sure you're creating a large opportunity, right? It's a business which has sort of gone from 200 stores to now 600 stores, a large business. Because, if someone who prefers a slim fit, it doesn't matter what your income is, you still prefer it, right? It doesn't matter whether you can afford it or not, but you still want it because the access to a YouTube or Instagram has democratized everyone's aspirations, right? So you still want that. Even the Uniqlo down jacket, right? In Vishal shelves, people want it. It's like sort of, that's the aspiration for people. So how do you get that aspiration fulfilled is something which has hit the chord.
Yeah.
I actually want to give you a Uniqlo example on it. If you think about it, that's exactly what it is, right? That's why the company has done so well.
Yeah.
They give you very high quality and very affordable price points, and you feel good wearing it.
Correct.
So I think that's the thing that a lot of people miss, in my view. That they have to understand the end audience and what you're looking at. Like one of the discussions we were having on your shaving product. Right?
Yeah.
Your product is for India. Your product is not for the US.
Correct.
In India, people shave very differently.
Correct.
At the end of the day, you're still cutting the hair, but
Correct.
the way you're doing it is very differently.
Took us so long, Sunish, to realize this, that Indian skin is black hair broadly on brown skin. Okay, for men and women both. Hair removal is very different for us compared to, let's say, the US or the Western world, where it is either blonde hair on Caucasian skin or black hair on black skin. In both cases, contrast effect is minimal. In our case, contrast effect is higher. Also, if you look at the subcontinent, you have highest amount of hair density per square area per square inch in, let's say, the Middle East. But most of their skin is covered because of the heat. Right? So they don't need to do a lot of hair removal. Plus, because of the religion, there's a bearded culture. You move towards East, India is the first non-bearded country. Okay? Where there is a high amount, where we marry high temperatures, so you need to remove hair, otherwise it becomes uncomfortable. Black hair on brown skin. At the same time, if you go towards East, from India, hair density becomes much lower. Actually, if you go towards Japan, like China, Southeast Asia and Japan, hair density again kind of falls drastically.
Correct.
So this is a very unique hair removal market in India. And we have traditionally left it to services. We left it to barbers and waxing salons and stylists and so on. But the DIY part of it is now becoming more and more important. But at the same time, the category is functional, not beauty. So how do you make the category fun? Hence the 10 minutes of happiness part of our vision. You give value, give aspiration, and at the end of the day, just penetrate bathrooms in a more meaningful way. It's taken us so long to realize that we are doing something which is fairly unique. But, like now that we know, we probably will kind of do it, just do more and more of the same.
And it was fine. See, a lot of successful businesses are also very repeat businesses. People forget that also. But every time the interaction has to be as good or better than what happened last time. When you open the can and you take out the foam, you want it to come out thick.
Correct.
You want it to stay properly. You want to have a smooth shave in it. So I think it's very, very basic things that you have to deliver continuously every day. When you place an order on Amazon, if it says 2 days, please deliver it in 1.5 days, but not 2.5 days.
Yeah.
Half days matter? No, but the expectation setting matters.
Correct.
If you've got to deliver in 2.5, say 3. That's what they have beautifully done. But it takes the stress out of the system, right? Today you can see a black and yellow cab in Mumbai, but you've ordered an Uber, you're happy to wait for 5 minutes.
Yeah.
Well, you know it's coming in 5 minutes, you can track it, you can see it, and you're saying, okay, it's 5 minutes, I can wait. It's okay, it's not the end of the world.
Correct.
So that's where I feel that the businesses who understand the end customer and take anxiety out of it or stress out of it. If people were worried that they shook your foam and they sprayed it, and whether it was liquid coming out or foam coming out of it, you will see that they would be worried about the product. When they know its consistency is there, when they know over consistency, Amazon consistency of experience is much more important than giving exceptional experience and not bad experience.
Yeah, the 60-0-60 answer. It's just better to give like this
Consistency.
Completely.
Always say. So you were asking about entrepreneurs. We like consistent entrepreneurs who understand this. And what you promise, see, it doesn't matter. You don't have to be best in every field. But what you promise, you deliver.
Yeah.
99% of the time. Nobody can deliver 100% of the time. Exceptions will happen. And admit your mistakes. If you see half the time, it just takes one simple sorry, right? Rather than arguing. If you have made a mistake, you say, look, I'm sorry. And that's all. And it just finishes it.
Any altercation ends with an apology. There's nothing left. No. It's so cool, man.
Consumer businesses, some of the most interesting businesses also are very good at hammering the same point again and again till it resists. Like if you look at what Fog did, right? 2 massive giants, and they just came out and said, only one point they said, you get more.
Yeah.
It's not a real spray. You actually get the perfume. 1 point, kept hammering until people just said, wo spray dio hota hi hai. And that's the new category, where the big giants then launched similar products to try and take them on, right? But by the time the market was already had gone much ahead. These guys had taken so much share.
What people forget is fog is actually was a premium product. It is a premium
It
product.
is a absolutely.
It's an
Absolutely.
expensive- Yeah. And it does not require all that, all the dispensing and, literally perfume in water in a can, in the form factor of a deodorant.
That's the brand and positioning, right? I mean, we were having this conversation. One of our colleagues, Ashwin, was talking about it in a Friday meeting, which is our internal team day, talking about two axes of innovation and distribution.
Yeah.
And, in different categories, how do you put different people in the four quadrants of, high innovation, high distribution, or great innovation, great distribution? And, how do they sort of map the journey? At some point, different people may have been in different quadrants, but eventually, obviously, you want to be on the best of distribution, the best of innovation.
Yeah.
Easier said than done.
Correct.
But, that's sort of what characterizes great businesses, especially in consumer.
Absolutely.
Because we're able to continue to innovate and, use that to build the best distribution online, offline, mind share.
I think one of the things that we are doing with our razors, which is, and I hope it is our fall moment because we're launching a category. This is going to be our fountainhead category because it's not going to be. People don't realize that Gillette is actually a minority player in the shaving market. It's actually double-edged and services and all of that, right? But it is the equity builder. If you have a razor, then you have a senior variable. So we said, okay, fine. But what is it about Gillette that people don't like? It's a fantastic business and it's just a brilliant product. And honestly, we can't do the investing and steel and all that Gillette can do. We can't. So we can't beat them on that. But I think everyone knows, especially Vector, Sensor XL, Mark III, Fusion and beyond, these 4-5 products with cartridges are expensive. Like I find a Master Fusion cartridge expensive. So I can imagine it for India being an expensive product. So our razors, all of them without exception, are going to come with a razor sharpener. It's basically and I don't know whether you guys know this, but it's strap of a synthetic material attached to a surface. You can hand it in your bathroom or keep it on the sink. You take your razor and you kind of just rub against it 2 or 3 times, and the razor becomes like 3 or 4 more shaves in it.
Wow.
So it's actually a very self-killing thing, and that's what we're going to talk about in the Razorpreneur on the BarberShop, where we're going to tell people that we want you to tell your customers to not buy our cartridges for as long as they can and save the world. Like, don't trash the world, reduce plastic, sharpen your razors every time. Baki sab chodo, ye sharpener khareed lo, don't buy our razor. But whatever you're using, at least sharpen that so that you can it. And hopefully that is our fall moment. Where that's the message that we want to keep hammering over and over. We use multiple media to do it. But you're right, I think it may work, it may not work. I think this is, I have the privilege of talking to you before it happens, because of course, if it bombs, then you will be like, I bombed, and if it did, like, in support.
Well, that's what we all do, right? We keep running different experiments. Some work, some don't. That's the beauty of sort of being an entrepreneur.
Actually, that's the only way it works. They put it out in the market is long, you'll never know.
Because same guy who launched Fog, launched Close, the razor brand, and it didn't work. Right? So there was something.
Even single-use makeup, that didn't work. They launched the single-use makeup, that didn't work. So I think a lot of times people forget that past is not necessarily a determinant of what the future is. You have to figure out what market needs, how they need it, etc. And then understand your target audience. I always say go from that and backwards.
Correct.
First, understand those guys well. Who are you targeting the products to? Why are you targeting? What are you doing? Which is what at least I found very fascinating. That's why it stuck with me, your shave thing.
Yeah.
For an Indian market perspective, it's a smart way to think about it.
We're doing a lot of good. So I don't know whether you know this. 17% of Indian men have now started premature balding. And most men
balding.
And most men who go bald prefer to completely shave off their head and have some kind of facial hair. Because you don't want like halfway through kind of thing. There's no head shaver in the market.
Wow.
And there's a 3 to 4 times per week use case.
Oh, wow.
Because you don't want like 3-4 days of growth and like that half moon coming out. So we're now going to go onto the streets and ask people who are bald, because we have a product that doesn't need water to shave your head. You just take it, you like turn it on, and then there's a kind of just apply it on your head, and you have 2 settings, matte and gloss. Okay. So you can have to shine, like you want to really shine, finish it. You want like a billiards ball, or you want like a kind of not such a close, the mat finished, and then just do it on the streets, put it on YouTube, and
It's amazing.
so we are really kind of getting into the use cases of shaving and kind of figuring out how to do it. But you don't know, man. Like,
Oh, this is the passion, right? I mean, the way you describe it, the way you thought through it, the journey, the use case, looking at different markets. I mean, it just bubbles through, right?
Yeah.
This is what is the most inspiring part of being an entrepreneur, and seeing that come through in you about, Bombay Shaving Company is quite
but
fascinating.
we're battle hardened, right? It's not like we're in our first year or second year.
course.
Like 7 years, a lot of things are.
We're still at it,
Yeah,
going strong.
a lot of like it's a very humbling experience. To be
It is.
honest, to be around for this long.
It is.
But if you look at our investors, Reckitt is a 200-year-old company. Colgate is a 230-year-old company.
Wow.
Colgate did not have toothpaste or did not have oral care for the first 70 years of their existence.
Wow.
So if you look at it from that lens, right?
Yeah.
You guys talk about institutions that outlast you. But
Yeah.
consumer businesses will be about outlasting us.
Correct.
7 years, nothing.
Nothing,
10
yeah.
years, still nothing. We're not even
Absolutely.
right?
Absolutely.
But coming back to you, and you guys made a very, very positive and optimistic reference to in the context of India for the next 15, 20 years and the context of your fund and the work that you guys do. How do you see that shaping up?
See, we have always been big bulls on India. That's why, like, I think it's the same story for you. We had opportunities to go outside the country, work outside the country. But we felt you are in the country at a stage where it's changing and changing very rapidly. 97 to 2007 was a very different 10 years. GFC happened.
Yeah.
Things came to a standstill. 2007 to 2015 was a very different 8 years. The boom started, and then for the next 7-8 years, it was an amazing 7-8 years. And now you can say it's a consolidation phase. But as a country, geopolitically, you have stars aligning. The population-wise, you have stars aligning. Affordability-wise, you have stars aligning. And I would say from a pure underlying economics of creating businesses in India, stars are aligning, where you can actually build profitable businesses at very low price points.
Yeah.
A lot of people miss that. If you see some of the most amazing businesses built in this country are not businesses that charge whatever, 5,000 rupees per product, right? They're the 10, 20, 30, 40, 100, 200 kind of products, right? You get specs in India, 1,400, 1,500 rupees for a pair of two, right? And 10 million of them are sold. But hey, can you just imagine Bobby Parker sells 1 million, Lenskart sells 10 million, right?
Correct.
Because that's where the market explodes. But it has to be done profitability, which means that high gross margin businesses. High gross margin, I would say, is what gives you the ability to play
The brand game.
and build a brand, invest behind the business, invest behind the people. So I would say, are we very bullish? We are very bullish in India. I think I would say the next decade, if we play our cards right, it should be the decade for India, right? Everybody's saying, Morgan Stanley is saying it, McKinsey is saying it, Goldman Sachs is saying it. Their board is coming here next week for a board meeting. Global board is coming, which is after 10 years, nearly a decade. After a decade or 12 years, they're coming. So a lot of people are recognizing what India is bringing to the table. And I think there's a lot of geopolitically support as well. So I think feels like a very good time. It feels like a very good time to be an entrepreneur. Of course, competition is going to be higher than what it was 10 years back because more entrepreneurs are targeting the market, but market is also much bigger. And I think availability of funding is going to be a little tougher. We always tell people, raise money when you don't need it. Don't raise it when you need it. It's much tougher.
Correct.
So I think as long as you identify a core market, focus on the end segment, build a product which gives you good high gross margin, and it's a large addressable market, it should be a good story.
Yeah.
Now the rest is going to be on execution because execution is the fundamental proof of the pudding, right? You can build a great product, but if you can't execute it, whether it's a product, whether it's a service, it will not work. So I think a lot of people are very smart building a good product. They have to recognize if they're not good execution guys, get somebody who can help them. So very, very bullish. I think that's the, long-winded answer.
Now, if you just cover the India piece, I mean, whether it's, if you look at today, I think we were discussing this earlier, whether it's the combination of geopolitics, which has sort of made India kind of front and center by exception, not necessarily only by choice.
Yeah.
Demographics, the skill base of the people, around the various confluence of factors that are making India a fairly unique place to really build exciting businesses in. And this is not just for Indians themselves, but also, people who want to partake in this story.
Yeah.
Right. So I think hopefully, as you're saying, in the next 10 years, we will see this confluence really coming to the fore. And I mean, as business builders ourselves, we think of ourselves as business builders and business enablers, right? We hope we can be a partner of choice, in specifically 3 areas. Number one, in helping take good businesses and build them into great institutions that outlast us. Number 2, being a partner of choice in attracting, retaining, nurturing talent, both within Kedaara as well as outside Kedaara, because that's again a core ingredient in how India does. And number 3, both for domestic capital as well as for, overseas capital, the ability to provide, right risk reward in terms of returns and give them an avenue to finance the growth of India over the next many decades, right? Those are the 3, areas that we feel we can really truly play a role in the India growth story.
Amazing. Sunish, Nishant, I think this has been an absolute privilege to host you and in the barbershop. Also kind of to showcase to you the culture at Bombay Shaving Company and what we're doing, but fascinating to kind of hear your insights on how you built out, and congratulations on such a wonderful story. Every time I kind of talk to our bankers or talk to people in the ecosystem about Kedaara, and just it makes me very happy to see that the generosity and positivity with which both of you just come across as human beings also, which I can now extrapolate to the institution that you represent.
Thank you.
So congratulations. And again, I'm assuming that for you guys also, like, it's been 10, 11, 12 years.
Yes.
But it still feels like there's a lot more to do, a lot more to go.
Yes, absolutely. No, it's been a privilege for us as well. I think thank you for hosting us, and great to know you personally. I mean, we've heard a lot about you, but just great to know you personally. Anant and Ashutosh obviously know you well, but good to put a face to the name, and then getting to see Bombay Shaving Company up close and personal and really seeing the culture and the energy. Thank you.
Thank you so much. Totally. It's been an absolute pleasure. And I think just enjoyed the conversation more than anything else. I think just being upfront, honest, hearing from you as an entrepreneur what has worked also opens our eyes around some of the aspects that we would have missed.
Yeah.
And I think it's been a fascinating journey, and a big congratulations. Taking on a big giant, and what you're doing is phenomenal and makes us very proud to see some of this. And also we've opened up to new products that we didn't know.
Yes. Thank you so much.
Thanks
a lot.
And this was the product I was talking about. I'll show it to you.
Thank you.
Thank you so much.
Really
Wow.
appreciate it. Very nice.
Awesome. Thank you so much. Take care. Thank you. Come, I'll walk you guys out. I know you guys are getting late, but take care of yourselves.